Daddy. Market's breathing. Are you ready? Well, the stock market's raging and the traders all shout. There's one man we're watching, his moves full of clout. Some call him evil, some call him foul, but I just smile and call him Daddy Powell. Will Jerome Powell nuke the market again? With a flick of his wrist, make fortunes disappear in the wind. Wall Street's a jungle, lions on the prowl, but the king of the jungle is old Daddy Powell. Oh, Daddy Powell, oh, Daddy Powell. Every single time it's like a fucking roller coaster ride. It's gonna be a crazy, so hold on tight. Oh, Daddy Powell, don't bring me down. The numbers are flying red, ink, and green. For some it's a nightmare, for others a dream. Degens are crying, theories disavow, all bending the knee to mighty Daddy Powell. Oh, Daddy Powell, oh, Daddy Powell. Every single time it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down. The bulls and the bears are locked in a fight. Who knows if we'll feast or starve come the night? With a glance at the screen, I let out a howl when I see that old motherfucker, old Daddy Powell. Oh, Daddy Powell, oh, Daddy Powell. Every single time it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, and a little specialty shout out to Lady Piper for serenading us early this morning, getting ready for another day of Fed Chair Powell testimony. This time he will be speaking with the Senate. Yesterday he spoke from 10 a.m. to 1 p.m. Eastern with the House, and we learned, as we always do, that our elected government officials have no clue what they're talking about. To one point, a House member was literally asking seemingly about the difference between supply and demand, and hopefully the Senate, I don't know, is a little bit better prepared or something today, but we'll find out. Regardless, it is not stopping the fun times in the market. SPY above yesterday's high within, dude, it is this close to a new all-time high. The Nasdaq NDX at a new all-time high. Palantir about to hit a new all-time high. Meta ripping. The bulls are in control, folks. The bulls are absolutely in control. Check this out. Pre-market trading, SPY, like I said, up about 0.24%, not far away from this all-time high at 6,147.43, 147, remember that? And as of right now, we are trading at 105, so about $4 more to go in the SPY. But if you take a look at NDX, the tech sector, we are basically gearing up to open above this 22,222.61, but if you look at the gain in the Nasdaq right here, you can see we are in fact setting up to gap above the all-time high. You heard that right. all-time high, records being made today, or I should just say at least in about 25 minutes. And then obviously, if you watched the update video yesterday, quick question. How many of you guys watched the update video yesterday? Because if you did, it made you some dinero. I called out Palantir, I called out Meta, and I said put Tesla on your watch list because we are waiting for a couple things to really come into alignment. And then I think there's going to be another opportunity there. But I already pointed out from price structure, price momentum, and from the options flow, how Palantir and Meta were looking absolutely phenomenal. Absolutely phenomenal. So very excited to see that Palantir's up another percent. Actually, how far away is Palantir from the all-time high now? We are within 20 cents of it. And then Meta, obviously, we had that nice reversal on Monday, continuation on Tuesday. We're getting the gap up today. And then same thing here, talking about potential all-time high. Let me actually alter this just to not get it confused with the other ones right there. Boom, boom, boom. 740.91. We're at 717. Definitely possible today. So these are just some examples. It's definitely not the exhaustive list, but I mean, across the board, Palantir gapping up, Meta gapping up. You have Tesla at least improving off of the close. Netflix gapping up to a new all-time high. Broadcom gapping up. ASML gapping up. Nvidia gapping up. Microsoft gapping up. Are you guys seeing a tune here? Are you seeing like a little bit of, I don't know how good we are at pattern recognition within the audience, but if you're not so good at it, it seems as pretty much everything is in fact gapping up. So I very much hope you're on the bullish side of things because the bulls from every piece of data point that I have, every piece of data point that I care about are very much in control. So that's pretty much the TLDR and the setup today. Of course, we're going to dive into some of the larger picture things. We're going to dive into some of the smaller picture things. And then hopefully today there's enough time before the market officially opens that I can get over to some of your questions. We could do a bit of a chart breakdown. We could do a bit of an options breakdown. And if there's any other questions on your mind, hopefully we will get to that. But before we do, shout out to Take Profit Trader, aka TPT. Right now, this is your cheapest way to get into the world of sim-to-funded trading. You can get 30% off the eval, and you will not have to pay an activation fee. So from the process of getting started to actually getting to a funded account, this is currently your cheapest, most affordable option. Like I said, Take Profit Trader, shout out to them. Make sure to use that code Goonie. Quick side note here, their website, the way their UX is, it can be a little bit confusing. So not only do you have to put the code in, but you have to click the apply button. So I just want to call that out. But like I said, pinned to the top of chat and in the description of the video. And guess who's decided to join us today? The singer herself, the rock star herself. Oh, she looks tired. She must have had a late night of partying. You ready for Powell today? You ready for exciting Wednesday in the market? She always gets jacked up when it's new all-time highs. A lot of her major strategies are always targeting new all-time highs, and she's just absolutely loving it. Absolutely loving it. You ready, Piper? You ready for a big day? All right. Who knows? She'll probably take a nap at some random point or just ditch us. You never know. You never, ever know with that crazy one. She is, in fact, a wild beast, and she has a mind of her own. And on that note, we should really get rocking. S&P 500 futures are little change as the index nears an all-time high. Buckle up, Buttercup, because this rocket ship is taking off. How Trump cajoled Iran and Israel into a ceasefire and forced them to comply. Now, I'm going to play this. And I also want you to keep in context that this video, he's at NATO. The NATO summit's going on right now. So that's where, I don't know, we're getting a lot of commentary from Trump and obviously other world leaders. So I want you to compare and contrast two of the most recent videos involving Trump and also talking about specifically Iran.
The last thing they want to do is enrich anything right now. They want to recover. And we won't let that happen. Number one, militarily we won't. I think we'll end up having somewhat of a relationship with Iran. I see it. Look, I've had a relationship over the last 4 days. They agreed to the ceasefire. And it was a very equal agreement. They both said, that's enough. They both said it. I mean, they just went through hell. I think they've had it. The last thing they want to do is enrich. They've been trying to do it. By the way, it's hard to enrich. And, you know, when you look at a site like that, very, very hard to build. Very, very hard. Very expensive. They spent trillions of dollars trying to do this thing, and they didn't come up with it. And we're actually getting along with them very well right now.
All right. Bit calm. I would say,
want to do is
really what you expect from a president of like, hey, all right, we're happy we got there. It's a difficult thing, but happy they were cajoled into complying. All right, so that's coming out right now, obviously, speaking at NATO. Actually, he's speaking in real time. Also, keep in mind that last night, right here, June 24th, 2025, 7:15. I want you to appreciate that this commentary was a couple hours apart. Like, please understand the leader of the free world, the guy in charge of the most important country, the most dominant country, the most powerful country in the world at the NATO summit saying, hey, we're trying to figure things out. Things are tense, but it's simmering down. We're on a good path. Now, please understand, a couple hours before that, he posted this video to his own account. Please appreciate that.
Bomb, bomb, Iran. Bomb, 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 Iran. Bomb, 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 Iran. Bomb, 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 Iran. Bomb, Iran. My country's got a feeling, really hit the ceiling. Bomb, Iran. Bomb, 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 Iran. Went to a mosque, gonna throw some rocks. Tell the Ayatollah, gonna put you in a box. Bomb, Iran. Bomb, 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 Iran. Sam's getting pretty hot. Time to turn Iran into a parking lot. Bomb Iran, bomb, 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 Iran. Bomb, bomb, Iran. The country's got a feeling, really hit the ceiling. Bomb Iran, bomb, 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 Iran.
That's from the President of the United States, folks. That happened. That's a thing. That is actually the reality we live in right now. A minute-long clip of a bomb, Iran. Like, dude, what a fucking crazy dude. That is the world we live in, folks. That's the world we live in. Obviously, on a little bit more of a serious note, Trump says strike on Iran's nuclear program was obliteration despite inconclusive intel report. Trump is basically saying the Pentagon is wrong. The Pentagon is reporting that the strike actually wasn't that destructive and the facilities were not destroyed, and Trump is basically saying that the Pentagon has no clue what they're talking about and they were in fact obliterated. I have a feeling that the Pentagon's right in this one, but I guess at the end of the day, it doesn't necessarily really matter. What we're hoping for is a truce. We don't want any more bombing. We don't want any more destructive. We don't want any more missiles being flung across the skies. We don't want any lives to be needlessly lost. I think most people sitting here are basically saying, dude, we don't need another war in the Middle East. So hopefully this doesn't matter. Hopefully it doesn't lead to anything else. Hopefully, if anything, it just leads to tensions simmering down. Not only is, in my argument, that good for humanity, but it would be a thing that helps. Once again, I'm really focusing on the market hitting a new all-time high. Obviously, when tensions boil over, that's uncertainty. The market doesn't like uncertainty, so we want to remove uncertainty from the system to keep pumping to that new high. With respect to today, we have a couple of things going down. Obviously, the market opens at 9:30. Hopefully, I'm not doing anything stupid at market open. Just to show you guys, I have not made any trades yet today. Here's my 20 Apex accounts, all sitting at 54K, except for this one that's sitting at 55 because I had some weird errant trades. And then looking at the take profit, also sitting at 53.5. And then right here, these funded ones. I just had to do a scratch trade, ended up getting a bad fill and lost $15, but I don't need to trade those today because I already passed it. This was my 5th trading day. I followed the consistency rule and I needed it above 3,000 of profit. So I'm done trading these accounts. Basically, I passed the test, and in the event that I were to lose my pro funded accounts, then I'd be able to switch those over. But anyway, here is my 20 funded Apex. Here's my 5 funded take profit ones as well. So basically trading on those 25 accounts today. So hopefully between market open and Powell's testimony, I don't do anything stupid like I did yesterday, but Powell will be testifying again at 10 a.m. today. this time in front of the Senate. So we're going to get to hear from the likes of like Elizabeth Warren and see what brain buster questions they have. Also, new home sales will be coming out at 10 a.m. the same time. And then at 1 p.m. today, we're going to be getting the results of the 5-year bond auction. So those are the major macroeconomic things. Just to look forward to tomorrow, we have the GDP and we have durable goods coming out an hour before the market opens, as well as initial jobless claims. And then on Friday, we have the inflation report that's going to be coming out also an hour before the market opens. So literally every single day of this week, we have major macroeconomic things and also just global development. So every single day as an active trader, there are things to pay attention to. With respect to individual equities, yesterday we heard from Carnival and FedEx. Today, I would say, especially if you're following the semiconductor sphere, the processing chips, the likes of NVIDIA, AMD, all those, you might want to pay attention to Micron. That's reporting after the market closes today. And then tomorrow after the market closes, we're going to hear from Nike. We're not technically in earnings season, but just in case any of you guys are paying attention to those, I just wanted to call it out. FedEx beats earnings estimates, forecast $1 billion cost savings in the next fiscal year. That's awesome for FedEx if you're playing it. I never really trade FedEx myself. I don't even know if I'm invested in it, but I always do check the earnings because it's thought to be a good bellwether for the overall state of business. If FedEx is getting more business, that means a lot of other businesses are doing well because they're sending a lot of stuff. Now, if FedEx is missing, that kind of gives you an idea. So I like to use it as a barometer. Is it the end all be all? No, but I do like to use it for business activity. So I wanted to call that out. Carnival shares pop on earnings beat and rise full year outlook. Carnival, obviously, this is leisure. So this has a lot to do with retail spending and disposable income and people using their said money to go enjoy the finer things in life. So that's another positive sign there. Once again, FedEx and Carnival both beating. I found this cool article. Not really things that we normally cover on the show, but I just wanted to share with you. Investment platform plans to let anyone bet on SpaceX. Now, that's interesting because SpaceX is a private company. It's not publicly traded. Right now, you can't get exposure to it. I can't get exposure to it. Well, unless you're some fancy private equity, VC, big boy. But apparently, that's all going to change. Republic plans to sell digital tokens that mirror the performance of SpaceX's private shares in a move largely untested with legislators. Regulators, really. Well, both. Republic will sell digital tokens mirroring private shares of SpaceX and plans to expand its tokenization to other private companies. Token buyers won't have access to the company's financials and won't own actual stakes, and the tokens can draw scrutiny from regulators. Republic says it won't need permission from the companies whose tokens it is selling because the tokens represent securities sold by Republic. So this is obviously a new thing. Clearly, regulators have not said it is okay or it is not okay, so I just want to put that out there that it does not have approval from regulators. That doesn't necessarily mean it has disapproval, but it definitely does not have approval. But I just want to throw this out there because I myself have spoken quite a bit about SpaceX. I want to put this out there. I haven't used it. I have no association with it. I just wanted to put it out there just because it sounds on the surface level pretty cool, but it also maybe sounds like we should, I don't know, give it a little bit more of an investigation before you start putting your money into it, because sometimes when things sound too good to be true, they are in fact too good to be true, and you have to do a little bit of a deeper diving. So I just wanted to throw that out. If you haven't already, sign up for the newsletter, mattcohrs.locals.com. My mod will put it in chat. It's in the description of the video. This is 100% free. It's always been free, always will be free. I break down what's going on in the market. I call out the earnings, a little cheat sheet of the earnings you might care about, a little cheat sheet of all the major macroeconomic events. For some reason, I put Fed Chair Testifies yesterday. He's also testifying today. I don't know why I skipped that. Tuesday, yeah, I skipped it today. And then the 5-year bond auction at 1 p.m. Obviously, the stuff for tomorrow and to conclude the week. And then with respect to seasonality, here we are. It's kind of bearish. The Bulls don't win this day often. The Bulls win it only a third of the time. The Bears win it, obviously, 2/3 of the time. But in recent years, there's been some bullishness. So is seasonality the end-all, be-all on an individual day? No, I like to look at it more of the swing trade. And then, obviously, sometimes when you're driven by headlines, you can really just take seasonality and throw it out the window. But I do want to let you know, over the past 27 years, the Bears have more so won this day than the Bulls. So just want to call that out. And then for tomorrow, Thursday, leaning bearish. So today's legit bearish. Tomorrow's leaning bearish. And then Friday's a bit more neutral. But then that's kind of exciting, because if you look at what happens after we get through this point, here, I want to show you the seasonality for what's about to come up. you can see, let me focus in on June right here. We kind of dip until the very end of June, and then seasonally we pump until pretty much the end of July. This little period here, the first 2 weeks of July, is actually one of the most bullish seasonal periods of the entire year. Depending on how far back you look in data, it's actually the number one or the number two most bullish period of the entire year. So definitely keep that in mind. Definitely pay attention to it. But the tail end of June to pretty much the final week of July from a seasonal standpoint. I know we have that saying, sell in May and go away. But for whatever reason, the data does not suggest that. I know that's a common saying in Wall Street, and it's more so descriptive of the fact that people, whatever, go on vacations, they go to the Hamptons, they're not really paying attention. But from a trading perspective, for a degenerate trading perspective, this is actually a time that if you're paying attention, if seasonality plays out, you can make some good coin. You can make a couple shekels. So I just want to remind you, the end of June to pretty much the end of July, over the past 3 decades worth of data, the bulls are in control. And I'm particularly excited because this time around, this seasonality happens to be setting up with literally an attempt at a new all-time high. SPY, or really SPX, the S&P 500, let's just talk about the index in general, almost at a new all-time high. SPX technically 6,147, and if you look at SPY, technically 613.23. The NASDAQ, we are about to open up to a new all-time high. If you look at QQQ, 540.81, we're gearing up to gap up to 542. So we're not just at the all-time high, we're literally gapping above it. So the Russell, the small cap sector, does have some distance to go. To be fair, that's all the way at 245. We're currently trading at 214. So the larger sectors that we kind of pay more attention to, they're looking really, really good. Bitcoin having a good day. Honestly, this might be setting up for a technical breakout here soon. I'm going to be watching this trend line. You could bet your butt on that one. So we have a big pump, a little bit of a bull flag, and this bull channel might be getting that breakout. So obviously I will be playing. Wow, I actually didn't realize that Bitcoin was having such a good day. Such a good day. Okay, that's definitely, I'm going to throw an alert on that one. So you can see that we're clearly in a risk-on environment. Palantir almost at that new all-time high, 20 to 30 cents away. Meta, not that far from the all-time high. Tesla, I explained this better in the update video last night. Shout out to everyone who watched that update video. It is in the description of the video, but I did more of a comprehensive breakdown of why I think Palantir and Meta are looking great. And obviously, I'm being proven right in pre-market trading. And then I also gave the details in which I would place a bullish short-term position on Tesla. I'm already invested in it, but I'm saying a bullish short-term swing trade on Tesla. There's a couple things I want to look for. That's all in the video, and this one definitely on deck. Netflix also looking amazing, gapping up to a new all-time high. Avago gapping up to a new all-time high. ASML, not an all-time high, but obviously a gap up on the continuation of the technical breakout. NVIDIA, not that far from the all-time high, 153, trading just below 150 right now. Microsoft gapping up to a new all-time high. Apple, honestly, losing its way recently. Apple has not been really that exciting whatsoever. CoreWeave, I know we don't have that much data on it, but pretty much still battling at the all-time high. Circle actually getting a technical breakdown. So if you've been riding this Circle, the IPO, the market debut momentum, it is definitely losing it. I wouldn't be surprised. Back from my penny stock trading days, when you have a crazy runner like this, it is very bad to have that first red day where you close below the previous low. This one might be, at least in the short term, kind of signaling the end of the run on CRCL. MSTR also appearing to gap up. Rumble appearing to gap up. Coin gapping up after already tying the all-time high yesterday. Coin has gone from $253 to $263, $110 in a trading week. Coin is ripping. I completely missed this one. Ripper. This thing has no chill. No chill. I completely missed it. I hope some of you in chat got a piece of that one. DJT not looking so hot. Qualcomm, a little bit of a baby gap up. BITX, that's going to be right with Bitcoin. You have XRP in the green trading at 220. You have Solana in the green trading at 147. You have Texas Roadhouse actually break even, trading at 189. I think this thing is like $1 million per share company, but that's just my own opinion. You have bonds slightly down in pre-market trading, but really not that much of a move. And you have oil. This is, how crazy is this? Oil, black gold ripped all the way up to 78 and now just getting destroyed down to 65. You have gold taking also a breather because people are going back to risk on. And then you have vol just chilling a little bit, trading at 17. So not much going on in the world of bears, but in the world of the bulls, the bull camp is definitely celebrating. So let me get back to this so you can see the daily chart. Let me put this over here. All right. More so focusing on the short term. On the screen right now is the 10-minute chart for SPX, and this is what we saw yesterday: the high, the low, the close. That's the green, the red, and the white. I am always paying attention to those key pivot and psychological levels, and a lot of the time they overlap with key open interest levels from the market. Obviously, this white box, as always, is my transition zone. Above it is thought to be bullish, below it is thought to be bearish. The transition zone itself is created from the 0 DTE, gamma, and delta influence. So choppy within here, bullish above, bearish below. And then the leftover thing are these yellow horizontal lines, which are the major open interest levels of the day, where we can see big players playing big positions. And then the new thing on this one is just I marked out the all-time high because I thought that would be important to play today. So feel free to write these levels down, feel free to screenshot them, feel free to use them however you want, but these are the exact levels I'll be using. And pretty much I call them out before the market opens, and then they happen to be big reaction levels, and then I inevitably get messages and DMs and emails about how did I know it. Well, how did I know it? I just looked at the market breakdown. I looked at where the big players are. And speaking of that, Captain Condor is back. Captain Condor, a little bit bigger size than normal, 14,000 shares for the put credit spreads and the call credit spreads. The upper side of the Captain Condor is 6,120, spread by 6,125. And then the put side is 6,055, spread by 6,050. So that is Captain Condor. It's an iron condor position. It is a call credit spread with a put credit spread. This play benefits if we end the day within this region. And then obviously one side would get blown out if we close on the top side or on the bottom side. So this player, and really it's a group of players, is within this zone. Now, just because this player has this position on, is it the end all be all? No, this is not some high-end quant fund or a high-frequency trader or market makers or anything like that. This is a very large Discord, and they just all go in on the same play together. So this is not necessarily a player that you should think, oh, they know something we don't know. Do they have money behind it? Of course they have money behind it. I'm showing it to you right now. Look at what it's done. There's a huge positive gamma influence that is now exists because of this position. That's this entire purple/blue block. But I also want you to understand that it is not some large hedge fund that's done an extensive amount of quant research. It is literally a Discord, and they just have quite a bit of money, and they all do the exact same play together. Yes, sometimes it hits, other times they get blown out. And whenever they get blown out, they tend to come back the very next day with a large martingale. Well, it's a martingale strategy. Whenever they lose, they come back with like 3 to 4 exercise the very next trading session and hope to make that money back. So I want to call it out because, yes, from a market making perspective, there is going to be an influence on the market from this particular play. But also, I think in terms of psychologically, how much should you weight the importance of this position? Well, I would say kind of low. I think you should weight it highly with respect to market makers and how they have to react to it. But in terms of the true importance of 6,120 and the true importance of 6,055, I'm not going to weigh it that much. So just want to let you know, Captain Condor is back. Obviously, when the market gets going today, I will be showing you the options flow. It was pretty rocky up until 11 yesterday, and then we started to explode in the Mag 7, and really it was rocky up until about 10:10 in the S&P 500, and then we exploded, and we had some profit takers at the end of the day, but those people, in my humble opinion, got out a bit early because we are gapping up above yesterday's high. Does that mean that there's a downside gap fill? Of course there is. You could play that if you want. I personally have no reason to be on the bearish side of the market today because every quantitative empirical measure I have of the market does suggest that the bulls are in control. I will personally be looking for a bullish opportunity. And if there is no opportunity, I'll wait for tomorrow because other than that, I already have a bunch of bullish swing positions that I am looking just to ride and ride and ride and ride. Ride. I actually have a lot of bullish positions on right now, so I will 100% be looking for that to play out. And with that being said, we have about 5 seconds to go. So obviously in chat, vote what side of the play you're on today, bullish or bearish. I would love to know. And we are going in 3, 2, 1. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, so the SPY out of the gate already got its downside gap filled the gap. The Qs have a bit more distance to go. Palantir, new all-time high. I'm loving that, dude. My positions have to be looking a green. They have to be looking a green. Yes, they are. That is disgusting. That's a lot of green to wake up to. I'm a fan. So not that far away from the all-time high in the S&P 500. We did hit it in the NASDAQ 100. So the tech sector at a brand new high, which I think is kind of funny because literally earlier this week, people were talking about a market crash. And then also we're not that far away from April when the market was down 20% and everyone's like, we're never coming back. How do you think we're ever going to be able to make money? The market's done for. We're completely screwed. And now look at us. Everything is A-okay. No reason to freak out. Dude. I am making a killing on some of these plays. The market on open imbalance. What was that one? I'm always curious on if there's any strategies we can create trading off of those open auctions. S&P 500 minus 70 million. NASDAQ plus Dow. Okay, interesting. Interesante, mi amigo. Interesante. All right, where are we at today? What are we doing today? So the SPY chilling right above the high from yesterday. The Qs are even higher above it. Palantir, new all-time high. Meta, I would love to see that take out 720. The reason I'm focusing on 720, shout out to Spot Gamma. Remember, you could get 80% off if you use the link in the description of the video. But I just want to show you what I'm seeing on Meta. And actually, we could do this for all the stocks you guys particularly care about. But right here, oh, actually, this is a new play. Okay, so as long as we can get above and hold above 710, that puts 730 into play. There's a large negative gamma node right there, and I can actually show you. There's a lot of long calls on Meta up to 730, and then if you really want to swing for it, you have, let me turn that back off. You have the most extreme negative gamma. Where does this bottom out? It bottoms out around just above 750. So target one as of now. And of course, this is a dynamic situation and it can change. But I am looking for basically Meta to fall down this gamma mountain. And if it does, yes, it could get caught at 730. That's a large play. If that player decides to monetize, it would change the entire gamma distribution. But if they continue to hold, and this is a long call position, I'd be looking at the bottoming somewhere between 750 and 760, somewhere in here. So that's what I'm looking at on Meta. I know we have some Palantir fans in here, so let me do a similar analysis on that. On this one, I like it as long as it's above 140, 142, actually really 143. If it can get above and close above 143, the next evident play is 149. So get above, close above 143. I really like 149. What else? Okay, Meta, we did Palantir. I know we have some NVIDIA fans in here. Pretty much somewhere above 147 to 149, and then I'd be looking at 157. Tesla, I know we have some Tesla fans in here. I would like to see it above and close above 330, 335. Where's Tesla at right now? Tesla is at 339. So, all right, if it can get above this, I mean, we're kind of talking about 350, and then from there, it looks like someone has a large call credit spread on saying it's going to be below 370. So 370 is an interesting terminus point. Looking at Netflix, would love for it to get above and close above 1,290. That's probably going to be some serious resistance because I believe we are on the south side of that right now. Oh, we're literally battling it out at this key level. So Netflix is right at its battle. But if it could break that, we're probably closer talking to 1,300 and then 1,330, 1,330. Interesting. So there's a lot of plays right now. There's a lot of opportunity right now. And I hope you are getting yours. I very much hope you are getting yours. Okay. Mag 7. Well, that dipped to about 34. We wicked. The Nasdaq is wicking up to new highs. Wicking up to new highs. That's really not that much of risk. Not that much of risk. So the flow on the S&P 500 dip for the first 4 minutes trying to recover, while the Mag 7 is slowly but surely trending up, and the Nasdaq actually also dipped at 32 and it's now going flat. Palantir, new all-time high. Meta Pop gave some of it back. Netflix is battling it out at that key level of 1,290, psychological level of 1,300 coming up. Avago, new all-time high. ASML continuing on its rip higher. NVIDIA battling it out at that key level of 150 for options and also psychological level. Microsoft, new all-time high. Tesla's down. Oh, Tesla's getting hit out of the gate. That was a nice breakout right there on the Qs. Are we going to get this follow through though on the SPY? What time is it? It is 9:36. 9:36. New open range breakout. Clear skies ahead for the NASDAQ as of right now. We kind of got a bounce off. This was actually, it's early in the day to trade this, but if you took this long at 934, a bounce off this key level, not only the massive level of 6,100, but also the transition zone, this long right here at 934, risking that low, playing the follow through. I kind of like that trade. I mean, you took very minimal risk and you're already up 1-to-1 risk to reward. You could set your stop to break even. And if you catch it, you catch it. If not, no harm, no foul. Tesla, like I said, I really want this above 335-ish. The small cap sector is now in the red. We have Palantir up a nice 2%. SPY's up 0.2. The Qs are up 0.5. Palantir looks like it really wants to go. Palantir's flow thus far this morning, bullish. NVIDIA, bullish now flat. Tesla, bearish. Microsoft, bullish, giving some of it back. Apple, bullish. Netflix, actually a little bit bearish, a little bit flat. MicroStrategy, pretty much flat. Meta, a little bit more bearish. Avago, definitely bullish. AMD, bullish. AMD, a wee bit bullish. All right, let's check some of these other things. That is bullish, bullish, bullish. We don't have enough data there yet for this to do anything too exciting. Momentum, bullish, 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 bullish. And we broke out of the high from yesterday. Bullish, bullish, bullish. And we really broke out from the high from yesterday. Interesting. Yes, I think it's pretty evident. I am looking for, I don't know why anyone would be looking for a bear shot. Like, I think if you're looking for a bearish opportunity right now, you're just making a very rudimentary tactical mistake. I don't know what you could be looking at in the market that's like, yeah, I should be bearish. I mean, if you choose to do it, I mean, I guess in a weird way, like, I wish you luck. I don't want anyone to get blown out, but like, what are you looking at? Price structure, price momentum, and options flow. Three of the major things are all telling us the bulls are in control. And I see people trying to be bearish just because maybe they're contrarian in nature and maybe they're, taking a short just because they don't think we're going to hit a new high. Or, like, I guess I don't even know what the reasoning really truly is, but I don't know why you would be bearish. It just seems, like I said, a very severe tactical mistake. A very severe tactical mistake. Palantir, Bitcoin's at 107. Netflix is still battling it out at that 1,290 open interest level. Meta, Trying to think about how I want to play this one. Oh, brother. I could have done this out of the gate, and it would pretty much be done on the day. I want like a little bit of a pullback to minimize some of my risk here. Avago's just ripping. Nvidia's just ripping. Wow. Opportunity. Even Apple regained 200. Here is the flow on the Mag 7. So long and strong. SPY, long and strong. Someone's saying XRP. XRP's up 1% with the equity market about to hit a new all-time high, and you're focusing on XRP. That's just, you're a buffoon. An absolute buffoon. We all have limited capital, so with respect to capital efficiency, you should be putting it where you think you have the most amount of opportunity. And you're talking about something that's up 1% and it's trading at $2 when we have such other exciting, dominant things going on. That's ridiculous. That's absolutely ridiculous. Someone said CRCL. Is that cratering, CRCL? It looked like it was not having the best of day. Yeah, that's a classic. It just started trading, debuted not long ago, the start of June. First major red day, and especially if it did it on volume. I don't know if it did, but yeah. See, you have volume. So first major red day, big day, closing below the previous close, volume exhaustion. See how volume up, and then it got hit. This is such a classic reversal sign. Classic. I would not be chasing CRCL bullish at this point. I would actually wait for it to come all the way back down here. If anything, I'd be more interested in a bearish position on CRCL. Someone's saying VRT. I don't know what the hell this is. Cool. I mean, looks bullish. Higher highs, higher lows. I don't know anything about the options. I don't know anything about the company, but bullish momentum as well. But I literally know nothing about it. Okay. SPY catching a bit of a bid here. SPY catching a bit of a bid. A wee bit of a bid. $25. 25, 25, 25, 25, 25. That's a good 15 points away. That's $300 of risk. 300 dineros of risk.
Order submitted.
Okay, where did I actually get that fill at? $45 exactly. That's the max I could go for. All right, this one is not by any means a big brain play. It is a little bit chasey, which means I'm going to be a little bit more strict with my risk, as in I really want to move my stop up to break even like a little bit more rapidly than I normally do. But like I said, there's no big brains like behind this play. It's a momentum play. Mag 7 popping bullish, S&P 500 popping bullish, 5 minute, 10 minute, 30 minute, 4 hour on the S&P 500, 5 minute, 10 minute, 30 minute, 4 hour on the NASDAQ. We have bullish momentum, we have bullish options flow, and we have bullish price structure. If I see bullish across the board, and then when I see some of these bigger boys such as NVIDIA and specifically Microsoft also having nice green days, makes me feel pretty freaking confident. Even if you're confident, that doesn't necessarily mean you have a winning trade. Of course, you have to always perpetually respect your risk, and that's obviously why, just in case there's a random ass whatever announcement or something like this, I have my risk in control. And like I said, because I do admit this is not an A+ setup, if anything, I would say this is like a B, B-, because it's a bit chasey. Really, I should have been long at 934, but this isn't necessarily the period of the day I like trading, just because I don't know how the opening auction or whatever is going to go. But this really was the play of the day right here at 930 thus far. Obviously, we're only 15 minutes in, but this long, risking the low on the Q equivalent, you'd be long at 542.50. You're already up about 75 cents. You risked even less, so like you're already looking good. So I tried to play this breakout right here. It pulled back a little bit, and I see support being formed. So I'm hoping that this support holds if tested. I hope it really doesn't even get tested. But basically playing this breakout, and because of the time of the day, it pretty much was at the high of the day. So not the biggest fan of that. That's why I would give it a B, B- setup. It's not completely horrible because obviously there's quite a bit of excitement and fervor for the fact that the Q's hit a new all-time high. The SPY is not far away. I'm seeing some potential. Like this was the 934 really was the great long of the day, just because you had such minimal risk. And granted, it could have plummeted, and guess what? You had minimal risk, so it wasn't that bad of a hit. Or it could have gone in your way the way we are seeing right now, and it worked out beautifully. And really, I'm looking for the real risk reward of this is pretty much right here. This is the risk reward of this play is, well, here we could even undershoot it a little bit to 20, is this butte. Such minimal risk. Where does it actually give you? Yeah, a 4.4, or no, over a 5 risk to reward. And the reason I'm calling out 20 is because of the Captain Condor position. The Captain Condor position over here. Right here. Captain Condor, the call credit spread, 14,000 strong at 6,120. And then just for those of you wondering, at the other side of it, it's 6,055. So it's kind of like this is the dip that I probably should have waited for, a bounce right there. I could have had it sitting long, and that's why it was a B, B- setup. I could have had a bit more patience, but you never know. If it just ripped, I wanted to be done before Powell spoke. I tried to do the exact same thing yesterday. Unfortunately, the same thing happened to me yesterday, where heading into his speech and at the start of his speech, there was actually a bit more choppiness. So the goal was just to be done before this 10 a.m. announcement comes out, which is the new home sales, and then also just Jerome Powell getting grilled. So I tried the same thing 2 days in a row, basically putting a pause on one of my rules. Like generally, I try to wait those first 30 minutes before I do any trade, but because of how long the speech is and the potential impact, I wanted to just get in and get out if I can make a quick $200, $300, $400 per account. That was kind of my goal. Obviously, very similar to yesterday. It seems like I am back to the drawing board, and I'm gonna have to battle it out with old J Powell, which, hey, we're gonna see how it's gonna go. And of course, we're getting cracked right there at 946, right after that 15-minute Orbo breakout. Son of a bitch. Well, we're going to see how it's going to go. This is our first noteworthy profit taking of the day. How do I know that it's profit taking? Well, right there, see this green bar dropping. That's 0 DTE calls being sold, removing positive delta. And the fact that so many were being purchased, I would assume they were buying to open and selling to close. So you have some profit taking. I think it's at a strange level. I mean, I would understand if we saw this type of profit taking running into 6,100, but really they did it on the intraday high. Like you could see it started right here at 944, but you had some profit taking there, and I guess they just treated this minute one as some resistance, and that's what it is. So more so profit taking than anything else. I'm hoping that it stops soon and it doesn't lead to more profit taking or the creation of bearish positions and adding negative delta to the system, but that's all going to be 100% dependent on people who are trading after me. So we're going to see how this one goes. We're going to see how this one goes. You were saying what about the bears? That they're 100%. You realize we're green, right? You realize that the Nasdaq hit a new all-time high. Remember when you said, why would you be bearish? You realize we're at new all-time highs. Like by any definition, you're wrong. I love that. That's what's so interesting about like chat is you'll focus on one bar and be like, oh, that's a red bar. You got to be bearish. Like, how fucking stupid could you possibly be, dude? Like, that's very, 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 very dumb. Literally, we hit a new all-time high on the NASDAQ today, and you're like, yeah, I got to be bearish. Like, that's just retail trading. It's so common to be so focused on, like, just the shortest term movement. And you're like, ugh, saw a red bar. That means the bears have to be in control. Dude, you have a 50-50 shot. Any bar, 50% of the time it's going to be red, 50% of the time it's going to be green. I very much would implore you to zoom out of your like 30-second chart and look at where we are on the daily and the weekly. And you're going to realize that not only did the NASDAQ hit a new all-time high, the SPY is about to hit a new all-time high. And then some of the largest, most popular tech plays are literally all at new all-time highs. And then you guys are still like, I mean, whatever. I guess I'm not your mom and you could do what you want. But if you are being bearish right now, you're not a profitable trader. Like you don't know how to engage in the market. And any given trade, if you're bullish or bearish, yeah, you have a 50-50 shot. So I'm not saying you're being a poor trader. Trading is weird because someone who doesn't know anything about what they're doing can still make money. You have a 50-50 shot, obviously, of just whatever, the next bar, whatever time frame, it's pretty much normally distributed. But that's wildly different than being a consistently profitable trader, a net profitable trader. So if you somehow magically took a short position at 947, cool, you're up money for now. I have no idea what the next bar is, and neither do you. But just tactically to be going against bullish price structure, bullish price momentum, and bullish options flow, that's tactically the wrong thing to do. If you do that time and time again, your account will just be absolutely like just diving to zero, absolutely diving to zero. So when you have to take the time to, well, when you dive into the math of the market, you're going to realize the shorter the time frame, the more noise that there is. So if you're basing your entire like daily thesis on what the market does from 946 to 951, a 5-minute period, a random 5-minute period, and you're like, no, that's where we're going today because I saw a little bit of red here. That's recency bias. That's anchoring. That's you just basically wishing, using a small time period of what price does, whether up, down, backwards, sideways, inside out, that's just not good trading. I'm bearish for the rejection of the all-time high. So that's another thing that like maybe you're right, maybe you're wrong, but history tells us that the overall market, these indices such as the S&P 500 and the NASDAQ, they actually represent more like trend following aspects and patterns rather than mean reverting. Now, a lot of individual equities do actually represent more mean reverting qualities. So like, once again, what works for one particular asset or one particular ticker, that doesn't mean it necessarily works for all of them. So like I said, coming to the S&P 500 and the NASDAQ, there are a lot of great research articles out there that suggest whichever direction it's going, it's most likely going to keep going that direction. I say most likely because, of course, we have market reversals. That's an aspect of trading, clearly. But certain equities aren't like that. Certain equities are more so like thought to be like range bound trading, and you get to a high, great, short. You get to a low, great, go long. And those characteristics, just because they're true in one sense or false in another one, that doesn't mean it's perpetually true or perpetually false. There's like what it is. Like, I mean, this is probably a more interesting psychology discussion about the whole situation. But right here, if it's up, 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 people are like, oh, gotta be bullish. And then down, 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 oh, gotta be bearish. So you're always chasing what it literally just did. And that can actually work on a larger time frame. So if you're noticing the 4-hour bars, the daily bars, or the weekly bars are perpetually going in one direction, yeah, that actually can work. But if you're applying that to the time frame of like the 1 minute, the 3 minute, the 30 second, the shorter the time frame, there's just like a lot of noise. There's a lot of randomness. So like I just be very, very careful of creating your daily bias, or even like even worse, a swing, I don't know, thesis off of a couple minutes worth of data, especially at market open, where like just statistically it's indistinguishable from noise, literally indistinguishable from noise. I thought Trump was going to crash the market. Well, he did for a second there. The market was down 20%, and now we're literally, the Nasdaq's at a new all-time high, and the SPY's almost at a new all-time high. And that's how quickly things change in the market. I think we should listen to one more time to the Trump bombing song. Dude, that song, I cannot believe he posted that. Absolutely insanity. I'm bullish and bearish way, I'm right. I'm bullish and bearish that way, I'm right 100% of the time. What about the situations where we go nowhere and we close out where we opened? Baron von Schneider is betting on a V-shaped recovery. Well, Baron, I very much hope you are right, because I am underwater by about 20 points right now, and that does not make me feel the best. I am hoping that this profit taking was exclusively that, maybe people rolling out, creating new positions, and I'm hoping we get some aggressive follow through. But I do like this bounce right here off of 6,100. Obviously, I'm looking for this to hold. Right now, let me show you this, the fractals. We do technically have equal highs and lower lows, so slightly more bearish because of the lower low. So I'm looking for this structure to break above 6,108, because that would mean that at least the bulls have a fighting chance, because at least we have higher highs. Technically, you wouldn't be that confident, though, until you see where the next low is, because right here, all we know is we have equal highs and a lower low based on really market open. But look at that. We are recovering. Isn't that funny? How a couple minutes ago, people were like, oh, you're saying you shouldn't be bearish? Because like, how like fucking egotistical is that? Just, you had a couple minutes of bearishness and people are screaming, oh, I told you to be bearish. Dude, we've already bounced all the way back. Where are you now? Where are the fucking chirpers now? Huh? You got awfully fucking quiet there because the market went in your way for what, 3 to 5 minutes? Oh, that's interesting. We've bounced all the way fucking back, you dumb fucks. This is one very, very important aspect of trading. You have to just admit you have no clue where we're about to go. You have to admit it. The next bar could be a giant green bar. It could be a giant red bar. We could just go sideways for 45 minutes. No, like, everyone tries to think that there's like this magical system or model that tells you what we're about to do. Folks, that is impossible. You're going to be chasing something that does not exist. There's no such thing as this holy grail model that tells you, oh, we got to go up, we got to go down. It like this prediction of what's going on. Sometimes you could have some insightful things of like, maybe we bounce off of major support. Maybe we get rejected at major resistance. Yeah, those are some things where maybe you have slightly better than 50-50 odds, but none of this stuff is written in stone, because price itself, I know that in the Twitter sphere, the internet sphere, there's this idea that it's like programmed. There's this algorithm, and it's almost deterministic, and it's somehow someone out there knows where we're going to go. No, that does not exist. That is not a real thing. All of these trades, whenever we move, that is based on people in real-time trading, deciding to buy and sell. Every single trade has a willing buyer. Every trade has a willing seller. It's buyers and sellers meeting and saying, yeah, I will give you whatever the underlying asset is, and then the other side's agreeing on price. Great. And if they agree on price and size, well, the trade goes through. If they're agreeing on higher and higher prices, we go up. If they agree on lower and lower prices, we go down. My point is that no one has any idea of why someone might be buying or selling. Is it retail? Is it a random system? Is it a big pension fund? Is it bots reacting to news? Is it accurate news? Is it inaccurate news? By the time you really think about why people might be trading at any given second, it becomes an infinite amount of variables. It's a multivariate equation that the amount of variables is literally borderline infinity. So what you need to do is realize that this is not a game of prediction. It is literally just a game of reaction. Can you identify a low risk, high reward opportunity and just do that time and time again? You can't really be putting all your eggs in one basket, because if you are, eventually you're going to find the bad beat and you're going to blow out and you're going to lose all your money. But if you do it with proper bet sizing, low risk, high reward, that's how you survive this game. And really, if you're doing it that way, it ends up becoming boring, and you're just doing that time and time and time again. Now, someone said Trump is speaking. I know Powell should also be speaking, but where's Trump speaking? This is Powell. He's getting...
Never been anything.
All right, we'll go to Powell
rebuilt
right
the
after.
Entire military during my first term, and we have a great military. We have great generals. I got to know the good ones and the bad ones. We kept the good ones. Over the past 2 days, I was honored to participate in the NATO leaders meeting, and also had extremely good individual discussions with the King and the Queen, Secretary General Rutte, and the Prime Minister. Great discussions. Very knowledgeable people. Major focus of our conversations at the summit was the need for other NATO members to take up the burden of the defense of Europe, and that included the financial burden. As you know, it was 2%, and we got it up to 5%. And they said, a couple of them came up to me, one in particular said, sir, we've been trying to get it up to 3% for 20 years, and we haven't been able, and you got it up to 5%. So they're going to be, most of them, I guess almost all of them, are going to be contributing now 5%, a number that people are surprised at, but you need it today. The United States accounts for 2/3 of all NATO defense spending, and since I began pushing for additional commitments in 2017, believe it or not, our allies have increased spending by $700 billion. I said to people, you don't have any money, and a lot of them weren't paying. And so I started the process, and I picked it up as soon as I got back, which is 6 months ago. And following my election last November, almost all have accelerated plans to reach the 2%, 3%, 4%, and then ultimately, very quickly, 5%. And all of this is going to be done very quickly, almost immediately. You probably know this as well as I do. I'm sure they've been talking about it. It's really been a big focus. In a very historic milestone this week, the NATO allies committed to dramatically increase their defense spending to that 5% of GDP, something that no one really thought possible. And they said, you did it, sir, you did it. Well, I don't know if I did it, but I think I did. This will be known as the Hague Defense Commitment, which is pretty good, pretty appropriate. When the allies reach this number, it will add more than $1 trillion a year. Think of that, $1 trillion per year to our common defense. And this is a monument really to victory, but it's a monumental win for the United States, because we were carrying much more than our fair share. It was quite unfair, actually. But this is a big win for Europe and for actually Western civilization. For years, past administrations failed to get most allies to contribute even the 2%. I remember when I came here, we had 4 countries that were up to 2%, and I remember Poland was there. A couple of them were there, and but most of them were. We had 28 at the time. As you know, it's increased a little bit, and they've agreed now to more than double their budgets in all cases. And Europe stepping up to take more responsibility for its security will help prevent future disasters like the horrible situation with Russia and Ukraine, and hopefully we're going to get that solved. Last week they lost 7,000 soldiers, mostly soldiers, but they're also getting hit in Kiev. They're getting hit in some of the towns also. And that means life. Life is disappearing also in the cities and towns. Should have never happened, would have never happened if I was president. I said it 1,000 times, and it never did happen. It's never even thought about. But it's vital that this additional money be spent on very serious military hardware, not bureaucracy, and hopefully that hardware is going to be made in America because we have the best hardware in the world. You saw that where 14 missiles were shot at us the other day. And they were very nice. They gave us warning. They said, we're going to shoot them. Is 1 o'clock okay? They said, it's fine. And everybody was emptied off the base, so they couldn't get hurt except for the gunners. They call them the gunners. And out of 14 high-end missiles that were shot at the base in Qatar, all 14, as you know, were shot down by our equipment. Amazing stuff. Amazing that they can do. It's like shooting a bullet with a bullet. It's the same thing if you think about it. 14 out of 14, and they weren't even that surprised. I said, do you do that well often? They say, we pretty much do, sir. The Ukraine crisis has also highlighted the urgency of rebuilding our defense industrial base, both in the United States and among the allied nations. We cannot afford to be dependent on foreign adversaries for critical minerals. And as you know, we made a deal with Ukraine to take a vast amount of the land they have for minerals. We need it. And once again, I want to thank all of the people in the Netherlands, incredible people. It's a great place.
Connection
And
lost.
all of the NATO allies for the tremendous summit that we just had. A letter just came in, and a statement came in from the Atomic Energy Commission of Israel. And I just wanted, this is an official letter, and they're very serious people, as you know. The devastating U.S. strike on Fordo destroyed the site's critical infrastructure and rendered the enrichment facility totally inoperable. It was devastated. We assess that the American strikes on Iran's nuclear facilities has set back Iran's ability to develop nuclear weapons for many years to come. This achievement can continue indefinitely if Iran does not get access to nuclear material, which it won't. It's so sad that that whole thing had to go. But I just want to thank our pilots. You know, they were maligned and treated very bad, demeaned by fake news CNN, which is back there, believe it or not, wasting time, nobody's watching them, so they're just wasting a lot of time, wasting my time. And the New York Times, they put out a story that, well, maybe they were hit, but it wasn't bad. Well, it was so bad that they ended the war. It ended the war. Somebody said in a certain way, you know, that it was so devastating, actually. If you look at Hiroshima, if you look at Nagasaki, you know, that ended a war too. This ended a war in a different way, but it was so devastating. Also, they have, out of Dubai, just came that Iran's foreign ministry spokesman, this is Iran's foreign ministry, says its nuclear installations were very badly damaged by the American strike. So what bothered me about these reports with fake reports put out by the New York Times, failing, I call it the failing New York Times because it's doing terribly. Without me, it would be doing no business at all. But, and by fake news, CNN and MSDNC, all of these terrible people, you know, they have no credibility. You know, when I started, they were at 94% credibility, the media. Now it's at 16%. And I'm very proud of it because I've exposed it for what it is. But when I saw them starting to question the caliber of the attack, was it bad? Well, it was really bad. It was devastating. They were obliterated. In fact, you can't get into the tunnels. They just put that over. That just came out. They can't, there's nothing, there's no way you can even get down. The whole thing is collapsed in a disaster. And I think all of the nuclear stuff is down there because it's very hard to remove. And we did it very quickly. when they heard we were coming. It was, you can't move it. Very hard, very dangerous, actually, to move to. And they also knew we were coming, so I don't think too many people want to be down there knowing we're coming with the bunker busters, as we call them. We're the only ones that have them. We have the best equipment, best nuclear equipment, and we have the best equipment in the world. And by the way, we can't forget our submarine, which was out there, submarines actually, but submarine was out there. We shot 30 rockets into an area, every single one of them. I think it was almost 400 miles away, I think, Pete, right? 400? And long. It was in the ocean, long ways away. And we shot a total of 30. Every single one of them hit within 9 inches from where it was supposed to be. It took it a lot because we didn't do just Fordo. We did 2 others in addition, which hadn't been completely destroyed. So we hit them with a submarine from hundreds of miles away. Amazing, just amazing equipment. Greatest submarines in the world. Nobody's even close. They're 20 years behind us when it comes to submarine technology. So that's one, and the other was from the Atomic Energy Commission, and they have about 3 or 4 of them now coming in from Atomic Energy Commissions from various places. But the one that we have that just came out, we released it a little while ago, was from the Israeli Atomic Energy Commission, but numerous of them are getting to see the site, and the site has been demolished. And again, we had these brave patriots, these incredible flyers, these people that can fly a plane better than anybody can fly a plane, going into very hostile territory, flying into the territory that has got more missiles and things pointed at it. But it was very stealth. They didn't get to see it. It was dark. That's the amazing thing about the shots. They hit the shots perfectly, and yet it was dead dark. There was no moon. There was no light. It was virtually moonless. It was very dark, and the shots were hit perfectly. But when they get demeaned, and they were very upset about it because they knew how strong it would be. Back in Missouri, the pilots flew about 36 hours, 2 ways, far distance, and in those incredible B-2s. And we then had the F-22s, and we had the F-35s, and we had other planes, and we had, I think, a total of 52 tankers. That means the big tankers, because the refueling was a lot for all of the different planes that we sent. Incredible
Mag 7,
operation, and I
getting
have to
crushed
say,
since 942.
General Raisin Cain was incredible. That's why he beat ISIS, and we beat ISIS in a matter of weeks. I was told it would take 4 to 5 years. We did it in a few weeks. And he was great. That's why he's the head of the Joint Chiefs of Staff right now, because I had a very good experience with him. He knocked out ISIS in a period of literally a few weeks. Amazing. And it was supposed to take a few years, 5 years to be exact. So we had a great victory there, and we then came here, and I think we had a great victory here. But this is an ongoing project. This is the safety of Europe, the safety of the world. And they've raised it from 2% to 5%, something which nobody, and you're talking about over $1 trillion a year. So we're talking about a lot of money coming in from countries that we're not paying nearly enough to be effective. So I have, as you know, Marco Rubio with me, and Pete Hegseth, Secretary of State and Secretary of War. Should we say Secretary? It used to be called Secretary of War. Maybe for a couple of weeks we'll call it that, because we feel like warriors. Used to be called Secretary of War. In fact, if you look at the old building next to the White House, you can see where it used to be Secretary of War. Then we became politically correct, and they called it Secretary of Defense. I don't know, maybe we'll have to start thinking about changing it, but we feel that way. Do we have any questions, please? Wow. That's a lot of questions. Who's a nice person? Oh, you're not a nice person, but I'll let you ask one. Go ahead. What's he going to ask? He is not nice at all.
Spy
I
Delta
know him well.
vomiting.
Thank you, Mr. President.
Yeah.
Thank you for taking the time before flying home. You just said you believe the conflict between Israel and Iran is over. What makes you so confident it is? And what do you do if it isn't?
Because I dealt with both, and they're both tired, exhausted. They fought very, very hard and very viciously, very violently, and they were both satisfied to go home and get out. And can it start again? I guess someday it can. It could maybe start soon. I think a big telltale sign was when, as you know, Iran somewhat, by not much, violated the ceasefire. And Israel had the planes going out that morning, and there were a lot of them, 52 of them. And I said, you got to get them back. And they brought them back. They didn't do anything. They brought them back. It was very good. I thought it was amazing, actually. They have fought a hell of a war. They fought very hard. I think the war ended, actually, when we hit the various nuclear
We're coming up
sites with
to
the
the
planes.
key 50
And
EMA
I just hope you
support.
people can give these pilots. These
What's
are the
weird
best
is
pilots
this
in the world. They're the
starting
best
at
shots in the world. They call them shots.
9:43.
That's what they are.
We're just seeing the NASDAQ
and
puke.
wait a minute. And I just hope you can
Mag
give them
7
the respect they deserve,
and
because
the
they came
spy.
home to fake news. And like, oh, gee, there was hardly any damage. The things are decimated. So, but I think, no, I think they're very much finished. I think Israel's going to get back to doing what they do, and I think that Iran's going to get back. You know, Iran has a huge advantage. They have great oil.
Maybe a
and
double
they can
bottom,
do things. I don't
maybe a
see
real
them,
breakdown.
Getting back involved in the nuclear business anymore. I think they've had it. They've been at it for 20 years, and I don't see that happening either. Now, if it does, we're always there. It won't be me. It'll be somebody else, but we're there. We'll have to do something about it. Yes, please, go ahead. Go ahead. Oh, fake news, CNN? Oh, yeah, here we go. Wait till you hear this question.
Thank you, sir.
You should really say how great our soldiers and our warriors are.
I think everyone appreciates our soldiers and our warriors. I do have two questions for you, Mr. President. You just cited Israeli intelligence on these attacks. Earlier, you said U.S. intelligence was inconclusive. Are you relying on Israeli intelligence for your assessment of the impact of the strikes?
No, this is also, Iran made the statement, and it's also, if you read the document that was given, that Pete can talk about if you'd like, the document said it could be very severe damage, but they didn't take that. They said it could be limited
Mag
or it could
7's
be very
still down.
severe. They really didn't know, other than to say
down.
it could be limited or it could be very, very severe. And you didn't choose to put that because it was very early after. Since then, we've collected additional intelligence. We've also spoken to people who have seen the site, and the site is obliterated. And we think everything nuclear is down there. They didn't take it out. Okay, question? Please, go ahead. Go ahead. Yeah, blue dress.
Thank you so much, Mr. President. Yesterday, you said China can now continue to purchase oil from Iran.
Yeah.
Are you giving up on your maximum pressure campaign? Because
With
there's
who?
sanctions right now.
With who?
On Iran?
No, look, they just had a war. The war was fought. They fought it bravely. I'm not giving up. They're in the oil business. I mean, I could stop it if I wanted. I could sell China the oil myself. I don't want to do that. They're going to need money to put that country back into shape. We want to see that happen. Would it? No, if they're going to sell oil, they're going to sell oil. We're not taking over the oil. We could have, you know. I used to say with Iraq, keep the oil. I could say it here, too. We could have kept the oil. No, China is going to want to buy oil. They can buy it from us. They can buy it from other people. But you're going to have to put that country back into shape. It needs desperately needs
Potential
money.
recovery?
Yeah. Yeah, please. Here we go. I'm picking the beauties today. Go ahead.
Picking
Mr.
the
President,
mutes,
Secretary
Clark.
General Ruta has described President
Mag
Putin
7
as an
trying to
adversary,
recover off the low.
a threat, an enemy.
Same with the spy.
Do you view him the same way? And in addition to that, you mentioned General Kane, your chief of staff, the chairman of the Joint Chiefs of Staff.
General Kane.
Yes, he has said that Mr. Putin has territorial ambitions beyond Ukraine. Do you view that in the same way?
Possible. I mean, it's possible. I know one thing. He'd like to settle. He'd like to get out of this thing. It's a mess for him. He called the other
Nope.
day. He said, can I help you with
Faded real quick.
Iran? I said, no, you can help me with Russia. Because, you know, in the last few weeks, we took care of India and Pakistan, Kosovo, Serbia. I think on Friday
smack.
we have coming in.
Pop,
The
smack.
Congo is coming in, and Rwanda is coming in. That was a vicious war that went on, a machete war, heads chopped off all over Africa. They're coming in. We did two others in addition to that. Nobody's ever done anything like this. No, I consider him a person that's, I think, been misguided. I'm very surprised, actually. I thought we would have had that settled easy. I've settled 4 of them in the meantime. But he did call up, and he said, he's close to Iran. He'd like to help us get a settlement. I said, no.
Financials
you
are
help
getting
me get a
cooked.
settlement with you,
So
with
is
Russia.
tech.
And I think we're going to be doing that
So
too.
are
Yeah,
utilities.
please. Go ahead, please.
Industrials.
Thank you, Mr. President.
Healthcare's
You've made
flat.
clear your position on what impact
Real
the strikes
estate's
had. I wanted
flat.
to ask you what is next with Iran. For instance, is there any indication from U.S. intelligence that Iran was able to move any material, including
No, we
enriched
just the
uranium?
opposite. We think we hit them so hard and so fast they didn't get to move. And if you knew about that material, it's very hard and very dangerous to move. It's called in many people they call it dust, but it's very, very heavy. It's very, very hard to move. And they were way down. They're 30 stories down. They're literally 30, 35 stories down underground.
You think you got it all?
Oh yeah, we think we got. We think it's covered with granite, concrete, and steel.
Can I ask you, are you interested in restarting negotiations with Iran? And if so, have they reciprocated?
So
Or is
our
this sort of
people,
settled?
Marco could answer this, but our people are not. I'm not. The way I look at it, they fought. The war's done, and I could get a statement that they're not going to go nuclear. We're probably going to ask for that, but they're not going to be doing it. But they're not going to be doing it anyway. They've had it. They've had it. Now maybe someday in the future we'll want that. But I've asked Marco, do you want to draw, I just asked him the question as we were walking on the stage, do you want to draw up a little agreement for them to sign? Because I think we can get them to sign it. I don't think it's necessary. Marco, do you want to talk about that, please?
Well, Mr. President, I think President Trump has shown a willingness to meet and talk to anybody in the world who's interested in peace. I don't know of any president that's been as willing as he has to meet with anyone and talk about peace. We'd love to have peaceful relations with any country in the world. And so obviously that'll depend on Iran's willingness not just to engage in peace, but to negotiate directly with the United States, not through some third country or fourth country process. But I know of no president, probably in our modern history, that's sought peace more than President Trump has.
Sounds like the door is open, but you're in no rush. Is that right? Sounds like the door is open, but
I'll tell you what, look, we're going to talk to them next week with Iran. We may sign an agreement. I don't know. To me, I don't think it's that necessary. I mean, they had a war, they fought. Now they're going back to their world. I don't care if I have an agreement or not. The only thing we'd be asking for is what we were asking for before about we want no nuclear, but we destroyed the nuclear. In other words, it's destroyed. I said, Iran will not have nuclear. Well, we blew it up. It's blown up to kingdom come. And so I don't feel very strongly about it. If we got a document, wouldn't be bad. We're going to meet with them, actually.
Similar to yesterday.
Yeah, go ahead, please.
Mr. President, Netherlands TV, thank you for visiting our country.
Good.
As I understood,
Thank you.
We bottomed at 10:08
Of course, I'd like to know
yesterday.
how you slept last night at the House of the King.
Oh, I slept beautifully.
But probably a more serious question. I think you just had a meeting with President Zelensky. Did you discuss any ceasefire in this Russo-Ukrainian?
No, I wanted to know how he's doing. He was very nice, actually. We had little rough times sometimes. He was couldn't have been nicer. I think he'd like to see an end to this. I do. I think what I took from the meeting couldn't have been nicer, actually. But I took from the meeting that he'd like to see it end. I think it's a great time to end it. I'm going to speak to Vladimir Putin and see if we can get it ended. But look, these are brave people. They're fighting these wars all over the place. Last week they had, I guess, I told you, close to 7,000 young soldiers, Russian and Ukrainian soldiers were killed, 7,000 in 1 week. It's crazy.
Fading
it's
again.
Crazy. So I'll be speaking to Putin. No, I had a good meeting with...
Same with the spy.
With Zelensky, and I had a lot of good meetings. We had a lot of good meetings with a lot of people, a lot of great leaders. But he's fighting a brave battle. It's a tough battle. Yeah. Go ahead, white dress.
Thank you. Ida Harikainen from Finland, Ilta-Sanomat.
Good.
You have played golf with President Alexander Stubb. How do you see Finland as a NATO ally and partner, and how would you describe your relationship with our president?
Well, he's a very good golfer, okay? In fact, he was on his college golf team. He went to a good college in the South, as you know, a very good college, and he was a good golfer. We had a good time. I think my relationship's great. I want to buy icebreakers. You know, you're very good at icebreakers.
Options are getting hit.
And I actually made him an offer. I didn't go to Congress. They'll try and impeach me for this. But there's an old, it's not old, it's fairly new, but it's used, icebreaker. And I offered him about 1/3 of what he asked for. But we're negotiating. We need icebreakers in the U.S. And if we can get some inexpensively, I'd like to do that. Actually, they'll fix it up, make it good. Also, we may buy some icebreakers. You know, you're the king of icebreakers, that particular country. They make them good. They make them really good, and they know what they're doing. And so we're negotiating with them for about 15 different icebreakers. But one of them is available now. It's old, and it's
the NASDAQ is battling it out
like
at
5-6 years old. And we're trying to buy it. I'm trying to make a good deal. That's all I do my whole life. My whole life, that's all I do is make deals. Yeah, please. Go ahead. Sir, go ahead.
Yeah, a question for NewsHour, Dutch TV. First of all, on Article 5, on your way here, you spoke about the commitment of the U.S. to Article 5, saying, I'll give you my definition once we're here. Yeah. What is your definition, and may the U.S. commitment to Article 5 change in case some of the NATO members do not reach the threshold that was discussed today? My second question is following up on a colleague on
right
Iran.
Back to
what
6,100.
intel reports do say that everything over there was obliterated?
Yeah, well, there are numerous of those reports, and they're coming out fast and furious. But the most respected ones we've already seen.
This might be the trend reversal
right
here,
here. That on a very
we took out some recent highs.
Basis, they're
now
looking
we need
at
to
the
pay
reports,
attention to the recent lows.
Like numerous reports, and including people going to the site and checking the site. And they're going to be having, I guess you're going to be having over the next couple of days a full, you're going to encapsulate it. But no, the site was obliterated, just like I said it was. And just like the pilots should be given credit for. As far as Article 5, look, when I came here because it was something I'm supposed to be doing, but I left here a little bit differently. I said, I watched the heads of these countries get up, and the love and the passion that they showed for their country was unbelievable. I've never seen quite anything like it. They want to protect their country, and they need the United States. And without the United States, it's not going to be the same. And you can ask Mark, or you can ask any of the people that were there. It was really moving to see it. They love their country. They were so respectful of me because I'm the head of the United States. And I made, you know, the King of Saudi Arabia, when I was in the Middle East, so I was in Qatar for a different reason, not a reason to get shot at. We were in there for economic development reasons, Qatar, UAE, and Saudi Arabia. All three leaders of those countries, and we took back $5.1 trillion into the United States. All three leaders said, you know, you're presiding over the hottest country in the world. The United States right now is the hottest. Everybody wants to be there. Everybody
5 minutes
everybody
back on
wants
the bullish
a piece of
side.
it.
5 minutes
He
back
said
on
a
the
year
bullish
ago,
side.
your country was
looking
dead.
for this 10-minute bar
You had
reversal.
a deadhead running it. You had a country that was dead, and it was dead. You had people pouring through the borders. You had inflation. You had everything. He said, you've made it in 5 months at that time. You've made it the hottest country. This is the hottest country in the world. The United States right now is the hottest country in the world. And when I was around that table, it was a
Tesla
nice
getting murdered.
Group of people, many of whom I knew from previous. When I saw the passion they had for the country, and almost everyone, and you probably have the tapes, it was very public, but almost every one of them said, thank God for the United States. Without the United States, they couldn't really have NATO. It wouldn't work. It wouldn't work. It will in the future because now they're paying much more money, but it wouldn't work. It was great. And I left here differently. I left here saying that these people really love their countries. It's not a ripoff, and we're here to help them protect their country. Okay, we'll do one or two more.
Thank you, Mr. President.
Yeah.
A question on Spain. Are you satisfied with today?
Oh, I think Spain's terrible what they've done. No, I do. They're the only country that won't pay the full up. They want to stay at 2%. I think it's terrible. And, you know, they're doing very well. The economy is very well. And that economy could be blown right out of the water with something bad happening. You know, Spain is the only country that, are you from Spain? Yeah. Good, congratulations. You're the only country that is not paying. I don't know what the problem is. I think it's too bad. So we'll make it up. You know what we're going to do? We're negotiating with Spain on a trade deal. We're going to make them pay twice as much. And I'm actually serious about that. We're going to make Spain, I like Spain. I have so many people from Spain that it's a great place and they're great people. But Spain is the only country out of all of the countries that refuses to pay. And, you know, so they want a little bit of a free ride. But they'll have to pay it back to us on trade because I'm not going to let that happen. It's unfair. It's unfair to NATO. All right, sir, please. Go ahead, right in the back. Yeah.
Man, they really screaming
the
this.
tall man.
Mr. President, Johannes Petra from Austrian National Television.
How are you?
You once said that you would end the Ukraine war in 24 hours. You later said you said that sarcastically.
Well, of course it was sarcastic.
But you've now been in office for 5 months and 5 days. Why have you not been able to end the Ukraine war?
Because it's more difficult than people would have any idea. Vladimir Putin has been more difficult. Frankly, I had some problems with Zelensky. You may have read about him. And it's been more difficult than other wars. I mean, look, we just ended a war in 12 days that was simmering for 30 years, frankly.
We're trying to base here
we
off
ended,
of 6,100.
Rwanda and the Congo.
Will the bulls
they're coming
be
to sign the
enough?
documents.
Mag
We've already
7's
signed
flat.
basic documents,
Spies
but they're coming,
trying
I
to
think,
point
to the
up.
White House on Friday.
We'll find out.
We ended, Serbia was going to go at it.
Watch this downsloping
But maybe
trend
the
line.
most important of all, India and Pakistan. And that wasn't whether or not they may someday have nukes like we're talking about in the Middle East, like we're talking about with Israel and Iran. This is they have nuclear weapons. I ended that with a series of phone calls on trade. I said, look, if you're going to go fighting each other, it was getting very bad. You know how bad that last attack was. It was really bad. If you're going to go fighting each other, we're not doing any trade deal. No, you have to do a trade deal. I said, we're not doing any trade deal. And in fact, I had the general, who was very impressive. The general from Pakistan was in my office last week. You know, Prime Minister Modi is a great friend of mine. He's a great gentleman. He's a great man. And I got them to reason. I said, we're not doing a trade deal if you're going to fight. And if you're going to fight each other, we're not doing a trade deal.
Almost
and you know
an
what?
all-time high on
He
NVIDIA.
said, no, I want to do the trade deal. We stopped the nuclear war. Go ahead. Go ahead, Jeff. Here's another beauty, Jeff. He's a beauty, all right. Go ahead.
Mr. President, to follow up on Ukraine, will the United States contribute any more money to Ukraine's defense this year to the $5 billion that allies are giving? And one question, you had another meeting with the Dutch opposition leader, Mr. Wilders. Can you tell us about that meeting? And are you upset about his anti-Muslim stance?
I'm not upset about it. It's just his view. He's unhappy with the way things are going in this country and various countries. He was an opposition leader. And I was asked to meet with the opposition leader by the people that are running. I think they have some deal where if you have a meeting, you're supposed to meet with an opposition leader. I said, that's strange.
NQ is back to 22,500 key psychological level.
He seemed like a very nice guy, but he's in opposition to the
Watch
current people.
for the
and that was set
10-minute
up by the
recovery
current
here
people.
at
So
22,505.
I assume when I met with the Prime
We're on
Minister,
ES
you're supposed to meet with the opposition.
6,155.
We'll have to try that sometime
Watch
in our
to see if
country.
we can actually push above.
Let's not do it.
On these.
But he was, I thought he was very good. As far as money going, we'll see what happens.
Mag 7,
There's
a
lot
little
of
bit of a
spirit.
pop.
Look, Vladimir
Spy
Putin really
nothing.
has to end that war. People are dying at levels that people haven't seen before for a long time. Go ahead. Go ahead. White shirt. Oh, she's all excited.
So, BBC News Ukrainian.
Where are you from?
I'm from Ukraine.
Oh,
so my
wow.
question to you is whether or not the U.S. is ready to sell anti-air missile systems Patriot to Ukraine. We know that Russia has been pounding Ukraine really heavily right now.
Are you living yourself now in Ukraine?
My husband is there.
Wow.
And
I can see you very, it's amazing.
And me with the kids, I'm in Warsaw actually, because he wanted me to be.
Is your husband a soldier? No?
He is.
He's there now?
Yeah,
Wow, that's rough stuff, right? That's tough. And you're living here?
in Warsaw.
And you're a reporter?
I am.
Good. So let me just tell you, they do want to have the missiles, okay, as they call them, the Patriots. And we're going to see if we can make some available, you know? They're very hard to get. We need them too. We were supplying them to Israel, and they're very effective, 100% effective. Hard to believe how effective. And they do want that more than any other thing, as you probably know. That's a very good question, and I wish you a lot of luck. I mean, I can see it's very upsetting to you. So say hello to your husband, okay? Thank you. Go ahead. Thank you.
Thank you, Mr. President. You were criticizing
Where are you from?
Bloomberg News.
Oh, Bloomberg. That's wonderful.
You were criticizing the Federal Reserve Chair before coming to this summit.
Yeah, I think he's terrible.
I was wondering if you've begun interviewing different candidates for the Fed pick.
Yeah, I know within 3 or 4 people who are going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible.
Potential reversal right off the 50
We have no
EMA.
inflation. We have a tremendous economy. Hundreds of billions of dollars
Waiting
of
for
tariff
the
money is
S&P
pouring
500
in.
to show the same
Factories
thing.
are being built because they don't want to pay the tariffs, so they're building them all over the country. I think we're close to $15 trillion. I told you 5.1 trillion from the Middle East alone, but of investment money coming in.
SPY's
There's never
having a
been
tough
anything
time
like
at
that
the
in
high from
history of our
yesterday.
country. But we have no
SPX
inflation.
is above it.
And we have borrowing because Biden, stupidly, they did short-term debt. So we have borrowing coming up. And, you know, we'll go 10 years, maybe longer, maybe shorter, but we'll go a long period of time when we do the debt. And because of him, because of this guy, we will have to pay for years. We'll be paying for him. And I said to him, listen, there's no inflation. He says, but maybe there'll be some. That's true. I said, if there is some, what you do is raise the rate. I'm okay with that. You raise the rate in 2 years from now or in a year from now. But because the rate's high, we have to pay more for debt. It's pretty equal. In other words, if it's 4%, it's 4%. If you drop it a point, you'll pay 3%. So it's fairly equal, not necessarily, but fairly equal. So we're going to end up paying maybe 2 points or 3 points more. 3 points would be about $900 billion a year because of this very average mentally person. He's an average mentally person. I'd say low in terms of what he does, low. Low IQ for what he does, okay? Wait, so instead of paying $900 billion, we don't want to pay 900 just because he doesn't want to lower the rate. I said, if there's inflation in 2 years or 3 years or 1 year from now, you raise the rate and you take care of the inflation, among other things. But he's probably a very political guy, I guess. I don't know. I think he's a very stupid person, actually. All right, one more. Let's go. How about you? Go ahead.
So hard.
She looks so happy and everything.
Thank you.
That's why I
I'm
picked
from
her.
Spain too. I'm Ana Buch from La Vanguardia. I wanted to know if
You're where from?
Spain too.
Ah.
I wanted to know if you want to.
That's the Spain corner right there. Shouldn't have said that. That's okay. I do like Spain, by the way. I think it's unfair that they're not paying, but go ahead.
Are you going to negotiate directly with Spain about?
I'm going to negotiate directly with Spain. I'm going to do it myself. They're going to pay. They'll pay more money this way. You should tell them to go back and pay. You're a reporter? You tell them to go back. They ought to join all of those countries that are paying 5%. Spain's going to be just about the only one that's not. They were the most hostile toward doing it. It just doesn't make sense to me. Okay. All right, Kelly, go ahead. Here we go. Here's another one.
Hello, sir. Thank you
We
very much.
got them all today.
Okay. So, Mr. President, you talked about expecting some on-the-ground assessments at Fordo and other sites.
Now here,
Is that
here again.
Israeli and U.S.?
It's been obliterated, Kelly. It's been
What is your message
obliterated.
then, sir, to the intelligence community when they present reports? You're not disputing the DIA report. You're just
They presented a
exists.
report that wasn't finished. We're talking about something that took place 3 days ago.
I understand that's
The report was done
So
2
what
days
is
ago.
your-
Wait a minute.
Yes.
They didn't see it. All they can do is take a guess. Now, if you take a look at the pictures, if you take a look how it's all blackened, you know the fire and brimstone is all underground because it's granite and it's all underground. You don't show it. But even there, with all of that.
Very quickly, the S&P 500 is still having issues at the high from yesterday, while the Nasdaq is having issues on the NQ contract at 22,500. So both are running into like psychological issues.
In fact, you may want to talk about it for a second because we're going to issue a report. And I think it's not even a very exciting report at this point. It's been obliterated, totally obliterated. And
Spy got
they
hit
did a
again here on the
report,
Delta.
but it was like, if you look at the dates,
Puts
it's
are
just a
going
few
crazy.
days after it
Understood,
happened.
sir.
So they didn't see it. They said it may be very severe. Go
Understood.
ahead.
Do you have a message for the intelligence community, though, in terms of unvarnished information getting to you, that it's not...
I don't really have a message. I would say issue the report when you know what happened. I wouldn't say that it could be severe or maybe not. They use the word severe. It could be severe or maybe it's not.
And
so people like you picked up and said, oh, it's not severe.
We're just
No,
looking for
the report was not a complete report. Yeah, the message was probably wait till you know the answer before you...
And, sir,
Go ahead.
did you not have a public
Nasdaq
component to
getting
your
hit.
Zelensky meeting for a tactical reason with President Putin?
Let him answer this.
Hello, Mr. Secretary.
Yeah. There's a reason the president calls out fake news for what it is. These pilots, these refuelers, these fighters, these air defenders, the skill and the courage it took to go into enemy territory flying 36 hours on behalf of the American people and the world to take out a nuclear program is beyond what anyone in this audience can fathom. And then the instinct of CNN, the instinct of the New York Times is to try to find a way to spin it for their own political reasons to try to hurt President Trump or our country. They don't care what the troops think. They don't care what the world thinks. They want to spin it to try to make him look bad based on a leak. Of course, we've all seen plenty of leakers. And what do leakers do? They have agendas. And what do? Do they share the whole information or just the part that they want to introduce? And when they introduce that preliminary report that's deemed to be a low assessment, you know what a low assessment means? Low confidence in the data in that report. And why is there low confidence? Because all of the evidence of what was just bombed by 12 30,000-pound bombs is buried under a mountain, devastated and obliterated. So if you want to make an assessment of what happened at Fordo, you better get a big shovel and go really deep, because Iran's nuclear program is obliterated. And somebody somewhere is trying to leak something to say, oh, with low confidence, we think maybe it's moderate. Those that drop the bombs precisely in the right place know exactly what happened when that exploded. And you know who else knows? Iran. That's why they came to the table right away, because their nuclear capabilities have been set back beyond what they thought were possible because of the courage of a commander-in-chief who led our troops, despite what the fake news wants to say.
Away.
But you're not disputing the report said what it said, even though it was initial.
The report said what it said, and it was fine. It was severe, they think, but they had no idea. They shouldn't have issued a report until they did. But we've gotten the information. I think Pete said it better than you can say it.
Mag 7 trying to go up ever
proud,
since
you,
1016.
Especially you should be
Spy
proud
is
of
very
those
volatile.
pilots, and you shouldn't be trying
These
to demean
pops
them.
and drop-offs
Those
are
pilots
related to
flew
zero
at
DT
great
posts.
risk, a big chance that they'd never come back home and see their husbands or their wives. Let me just tell you, you and NBC, fake news, which is one of the worst, and CNN, New York Times, are all bad. They're sick. There's something wrong with them. But you know what? You should be praising those people instead of trying to find some. By getting me, by trying to go and get me, you're hurting those people. They were devastated. You know, I got a call from Missouri, great state, that I won 3 times by a lot. And I got a call that the pilots and the people on the plane were devastated because they were trying to minimize the attack. And they all said it was hit. But we don't think it was really maybe hit that badly. And they were devastated. They put their lives on the line, and then they have, and I'm not referring to you, but real scum come out and write reports that are as negative as they could possibly be. It should be the opposite. You should make them heroes and heroines. You should make them really people that they were so devastated when they heard this news. And you know what they said? One of them, I spoke to one of them, said, "Sir, we hit the site. It was perfect. It was dead on," because they don't understand fake news, because they have a normal life, except they have to fly very big, very fast planes. but it's a shame. You should be making them heroes. All right, in the back. Go ahead, back
NVIDIA's
white.
going for it.
White jacket, yeah. Go ahead, give my mic. Hello.
Deborah Haynes from Sky News.
Good.
Mark Rutte, the NATO chief, who is your friend, he called you daddy earlier. Do you regard
what?
your NATO allies as kind of children?
No, he likes me. I think he likes me. If he doesn't, I'll let you know. I'll come back and I'll hit him hard, okay? No? He did it very affectionate. Daddy, you're my daddy.
Do you regard your NATO allies, though, as kind of like children, and they're obviously listening to you and they're spending more, and you're obviously appreciative of that, but do you hope that actually they're going to be able to defend themselves, defend Europe on their own?
I think they need help a little bit at the beginning, and I think they'll be able to, and I think they're going to remember this day. And this was a big day for NATO. You know, this was a very big day. They took it. One of the gentlemen said, you know what? We've been trying to raise the rate for 30 years, he said, 20 years, from almost the beginning. And he's been there for a long time. He said, until you came along, it never happened. What you did is amazing. It's been sort of an amazing day for a lot of reasons, but also for that. Yeah, go ahead.
Do you think they can do it without you, though, in the future? Can they do it without
Well, ask Mark. I mean, you have to ask Mark, okay? So we're heading back. We're heading back. I want to thank these two gentlemen behind me. They're incredible people, both of them. They've done a fantastic job. And Susie's in the front, and she's done great. And Monica, thank you very much. It was quite an exciting time.
Spy's now going.
And we're going to be heading back. We'll be back soon, and we'll see you in Washington, D.C. Remember this, we have the hottest country anywhere in the world. Thank you very much, everybody. Thank you.
The children!
Do you trust American intelligence?
All right, on to Powell.
Kennedy, I didn't interpret his comments that same way.
Oh,
I would also say that, one, thank you, and we echo what Senator Reid said, thank you for your independence and doing the job. End of the day, I think tariffs are a tax, and they're going to hit. I think, starting next quarter. And again, I think the reciprocity argument, that would be a nice goal. I guess, I hope we can then explain to the Australians who are a strong ally of us, who we have a free trade agreement, so we don't have tariffs, who we have a trade surplus with, who I'm hoping we're going to be able to build jointly submarines, why they, with all those things, still got whacked with a 10% tariff. Doesn't seem rational or logical to me. But let me get to, I've been very concerned about some of the Trump administration's, I think, mismanagement of the federal workforce. I can tell you some of the DOGE approach in the national security and intel world. Cuts are having dramatic effects. But today I want to mention something that, frankly, doesn't get a lot of attention, a very small entity, the Bureau of Labor Statistics.
Trend line breakout on both
U.S.
the
economic data,
we'll
which has always been independent. It's really been viewed as the gold standard across the globe. And frankly, the BLS data often is the guidepost that investors use regularly. BLS helps us get information about cost of living increases.
I almost was able to scale out of one. I only want one contract.
Used to adjust payments on the roughly $2 trillion in Treasury bonds. The truth is that the BLS data shouldn't be degraded on any basis. Yet, the administration is so dramatically, and I hope my Republican colleagues will hear on this, cut back the staffing at BLS, that the BLS has had to significantly cut back on the collection of critical price and inflation data. Normally, BLS staff, when you don't have all the data collected, will estimate about 10% of the inputs into the CPI. Now, with these cutbacks, they've had to estimate close to 30% of the data. That means faultier data. How can we grapple with this, and what does the undermining and staffing shortages at BLS mean in terms of your ability at the Fed to do your job.
This is really
we can still do our job. I would not want anyone to think that the data have deteriorated to a point where it's difficult for us to understand the economy as well as we can understand it, which is not perfectly. But the direction of travel is concerning. The U.S. has been a leader globally in investing in how to measure the output of a modern economy, which is something that we've led the world in for a long time.
It really did not want this
really
spy above
helps
that
not just
trend line.
policymakers, but also
Quickly
businesses if we
smacked.
have accurate information about what's going on in the economy. You're making decisions based on that economy, not just the Fed, not just you, but private companies as well. So I think it's I think it's something we should continue to invest in. And I don't like to
Fake
see
out,
any
smashed.
deterioration.
Maybe
in
we can continue with
the
higher
public
lows,
data, which
but
has been the gold
it
standard.
really
The
needs to pick
BLS,
up, like,
Bureau of
now.
Labor Statistics, and others have really been the bedrock that people really do look to as solid data that tell us what's
And these
happening
people
in the economy.
who do collect this input, who do some of this analysis, they are experts. They are not fungible. You fired one and hire another. I mean, there's an expertise here that has been, I think, being undermined. And again, you just look at the fact that if you have to do your estimates, move it from about 10% estimate to a 30% estimate, that is not good for the markets. Let me move to one other topic in my last minute. Stress tests, really important. Those of us who are involved in Dodd-Frank, really important as we try to particularly think about the most significant banks.
I think it's relating to this
But there has been
NVIDIA
concern.
profit
I've
taking
shared some of this concern.
right at 153.
The stress test process was so opaque that while the regulators may fully have understood, sometimes the very banks being regulated didn't understand fully the criteria. I know you're taking a look at how we can bring more transparency to the process. When do you think we'll see that, and what kind of changes do you think we'll make?
Well, later this year, we've said that we're going to, fully disclose the models, and that's the main thing. If you're going to set, it's like the IRS. If you're going to charge people taxes, you have to have the transparency about what that is. It's going to be the same as that. We're going to show how the calculations are made, and we're working on all that right now. We're also going to. We have a proposal out to sort of smooth the results of the test from year to year. So this is something we're working on hard and expect to have important progress later this year when we begin to publish the models.
I'm anxious to see it. Thank you, Mr. Chairman.
Senator Ricketts. Yes, sir.
Thank you, Mr. Chairman.
Back to VWAP.
As we were talking about tariffs a little
Definitely a
earlier,
fake out,
the
breakout
senator
for
from
now.
Virginia talked about Australia. I will point out that Australia has, we bought about $28 billion worth of Australian beef, and they've bought exactly zero of ours. So there's an opportunity to be able to improve that trade relationship. So that's one of the things I hope will come out of the trade negotiations.
You will acknowledge there is, though, we actually have a trade
We actually have a
surplus.
trade surplus with Australia, that is correct, but we'd like to sell more beef to them. So that's an opportunity. But one quick question on that, kind of just following up on Senator Kennedy's line of questioning. So if a tariff was put in place and the prices went up, wouldn't that be a one-time event, right? Because after that, it would be baked in. It's just a one-time thing.
So it might well be, as I indicated in my opening remarks, it might well be a one-time event, but that isn't a law of nature. We would want to make sure of that. We were more sure of that back in 2018 because we'd had 40 years of low inflation. Coming off of a global inflation episode where we haven't fully returned to 2%, it's something that's a question we will approach carefully.
But if the tariff is only put in once and just maintains the flat rate there, then how could that be inflationary in the second year?
Well, because it could be a process of many years. I mean, that's a couple of things are. One is if it comes in quickly and it's over and done, then yes, very likely it's a one-time thing, like an oil shock, a one-time oil shock where the price comes back down, it goes through the system. It doesn't raise inflation, just raises prices once. But if you have a process that goes on multiple shocks for years, for example, or if the shocks are very large, that kind of thing. And I think, again, we have to be conscious of the current situation, which is people haven't seen 2% flat inflation for some years now, and it's different from what it was in 2018 when we had tariffs earlier, when we actually cut rates. So I'm not saying we're not reacting at all of this. It's a risk we feel like as the people who are supposed to keep stable prices for the benefit of the American people, we need to manage that risk too. That's all we're doing. We're not deciding what to do yet.
So if Senator Warner's comment that a tariff is a tax, would that imply that then taxes could be inflationary as well?
No.
So what's the difference between a tax and a tariff then? Or do you disagree with Senator Warner's characterization that tariffs are not taxes?
I wouldn't disagree with that, but it's not the language I use. Look, this is, as I say, one time could be the base case, but in a situation like this where the process could go on for a long time, where the effects could be large or small, it's just something you want to approach carefully in a world where inflation is not back to 2%. And that's our job. If we make a mistake here, people will pay the cost for a long time. And so we're just approaching the question carefully. That's all we're doing. You know that, a majority of my committee has said that they do expect to cut rates between now and the end of the year in the remaining 4 meetings. So it's not that we're, taking a strong view that it will be inflation and not a one-time cost increase. It's just that we're going to take a careful approach to that very critical question.
Yeah. Well, let me switch gears on you a little bit. Communist China is our single greatest threat to America's national security and financial independence. Now more than ever, the U.S. must ensure the security of our financial system against Communist China's malign influence. And in 2022, Senate Homeland Security and Government Affairs Committee released a report identifying efforts by Communist China operatives to infiltrate the Federal Reserve System. The report contained real-life examples of Communist China's attempts and tactics used to target Federal Reserve officials. In late January, a former senior advisor to the Fed Reserve was arrested on charges that he conspired to steal Federal Reserve trade secrets to benefit and advance Communist China's
potential
interests.
higher low
This
being
Wall Street
put
Journal
in
article from May
relative to
2025
the
details potential
1024
ramifications
intraday
of
low
his actions.
on the
The
Qs
kind
here,
of data and trade
maybe.
secrets that this Fed Reserve employee
Mag
shared
7
could allow
still trying to
Communist China to
climb.
manipulate the U.S. market
Nasdaq
and gain
not so
advanced
much.
knowledge of changes to the
SPY
federal
is
funds
super
rate.
jagged.
It could provide
Intraday
Communist China
low,
with an
intraday
advantage
high,
when
back to
selling or
intraday
buying
low.
U.S. bonds and securities. Chairman, has the Fed Reserve made
Both the SPY and the Qs are at their VWAP, the volume weighted average price. So we're pretty much at equilibrium.
That's an incident, and I would say we take it very seriously. We have quite elaborate and serious and strict provisions around staff access to information, serious protections for confidential information. We have background checks. We have annual training. We have many of those things. I don't know that we've made any fundamental changes, but we're certainly, very sorry to see something like this having taken place. And we're certainly looking at the protections we have in place.
Great. Well, I have another question, and we'll just submit as a QFR, but I know the chairman said you've got a heart out, so I'll go ahead and yield back my time. Thank you, Mr. Chairman.
Thank you.
Potentially going to fail.
Senator Van Hollen?
Thank you, Mr. Chairman and Chairman Powell. Good to see you. I want to start by acknowledging the continued uptake of the FedNow real payment system. I know I've raised the development and rollout of that system with you in many, many hearings over many years. We're now about 2 years after launch. I want to continue to work with you and your colleagues to encourage expanded adoption of the capability and capacity so that customers have real-time access to their money. So I just ask that we continue to work on that together. You agree?
I do.
I thought you might. Thank you. So I want to ask you about the student loan situation in the country. And you've talked about this in the past, and you've talked about how it can be a drag on the economy, especially when it gets to be very high in terms of balances that cannot be paid. According to the New York Fed, student loan balances grew by $16 billion to reach $1.63 trillion in the first quarter of this year. Data shows an uptick in the student loan delinquency rate overall, the age of delinquent borrowers, and the number of newly delinquent borrowers. The Department of Education, meanwhile, restarted debt collection activities last month. And starting in July, nearly 2 million borrowers could see their wages being garnished. Meanwhile, here in the Senate, President Trump and Republican senators are working to pass this piece of legislation that would limit affordable loan repayment options and make it harder for borrowers to responsibly repay their debt and get back on a path toward financial health. So, Mr. Chairman, you said before in your testimonies that student loan debt can negatively impact borrowers' ability to fully participate in our economy, and that it can weigh down on the economy overall. Is that still your view?
Yes, it is.
Potential high
And
low still
could you
holding.
just share your assessment, just from a factual perspective, about how this problem seems to be growing at this point in time, and what would happen if we allow all of these borrowers to default?
So the point I was making, I try hard not to comment on things that aren't Fed policy, but I broke that rule in this case many years ago, and so I'll just say what I said then, which is, you can make all kinds of investments, and you can discharge if you can't pay back the loan, you can discharge it in bankruptcy. The one exception we make is student loans. And I ask whether that is wise national policy. People that borrow to invest in their education, that we do not forgive. It seems like something for Congress to consider, that's all. It's none of the Fed's business, really. Ultimately, it's not a big macroeconomic thing, but I've said it before. I said it again.
Mr. Chairman, I appreciate your breaking your own rule before, and I appreciate your
I won't do it again.
now. I could not agree with you more about the anomaly in the ability to discharge a debt in bankruptcy. The idea that student loan
So
sort of
Mag 7
is
is
the
trying to
one
climb,
category
while
of
SPY Delta is
debt
trying to
that we
fall.
don't allow to
They're
be
at
discharged,
odds with each
is
other.
confounding.
We're having a real
I
tough
think,
issue.
unfortunately, so far, it's been
At
a sign of
yesterday's
the
high.
power of some of the companies involved in that area. And I just came from another committee where I'm the ranking member, so I apologize if you already talked about the tariff situation. But I know this was obviously a factor that you all had to consider in making decisions about changes in the interest rates. Obviously, there's a lot of uncertainty in the economy. I mean, I hear it every day from Marylanders. We have the Port of Baltimore. We have lots of small businesses that rely on tariffs. You're an economist. You know that increasing tariffs is like increasing taxes across the board. But can you just speak to the uncertainty component of all of this and how that is weighing on people's decisions?
So surveys show very widely that people feel uncertain about the economy, and they do point to tariffs in that answer. I will say, though, that actually peaked back in April and has come down a little bit. And if you talk to businesses, I talked to an unusually large number of business people in the last couple of months, and the feeling is a little better now than it was. They're getting on with it and feeling, I'd say surveys are still showing depressed sentiment, but it's moved up from where it was.
I would say, Mr. Chairman, that may be the case at this moment, but we all know that we could wake up any morning and see another tweet, and that could change dramatically. So I appreciate your efforts to try to do what you can to meet your dual objectives at the Fed.
SPY is still dropping
Yes,
the delta.
sir. Senator
People are just
Lummis.
selling calls.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being here today. As you know, what always vexes me, and has for the last 4.5 years, about the Federal Reserve, is the bank supervision function as opposed to the monetary policy function. So I'm going to focus on bank supervision. First of all, I do want to thank you and Vice Chair Mickey Bowman for ensuring reputation risk has been removed from the bank supervision process. It was very arbitrarily used by those who were supervising.
Wow.
On January 27th, 2023. I'd call it the high watermark for Operation Choke Point 2.0. The Federal Reserve Board, in coordination with President Biden's White House, executed a coordinated attack to isolate the digital asset industry from the banking system. And while the Fed has taken steps to adopt a more balanced approach to digital assets, which I appreciate, the legacy of January 27th, 2023 remains with us today. So I'd like you to look at this quote.
It looks like this pump that we had at 1045. Not only are you seeing it in price, it got quickly faded. The bulls put up a fight, but You could see here the Mag 7 is attempting to hold, even though price is getting hit. But the S&P 500, it was a big pop at 1043, 1045, and it lasted literally 2 minutes. So we went from a delta high reading of the day on that pump to just a huge vomit all the way down. So, and like, if you look at the action, it's really, really jagged with puts. So like, look at all these 0DT puts. That's this light blue teal line. Really funky movement. But regardless, the end result is here at 1046, calls dumping and also puts dumping.
Clearly, I'll read it to you. It's from the Genius Act, which
Fresh
just
close.
passed the Senate by a vote of 68 to 30 last week. And it takes the opposite position to the board's policy statement on issuing stablecoins on an open, public, distributed ledger. So my question is, what has changed about the risk of stablecoins since the board
it's all now
adopted
aligned with
its
NVIDIA
policy in
profit
2023?
taking at 153,
And
almost the
now
all-time
that
high.
the Congress has weighed in, at least the Senate has weighed in and sent the Genius Act to the House, does the board plan to withdraw the policy statement on Section 913?
So I think what has changed is, if you go back, that's a couple of years ago, that was the period of high-profile failures and fraud and that kind of thing. And what's happened is, I think, the industry is maturing, our understanding of it is improving, and in a sense, it's becoming much more mainstream. So all of us are revisiting, the things that were done during that era. And I think the current view is that, that it's appropriate for, it's always been appropriate for banks to choose their customers and to be able to undertake activities as long as they're safe and sound. In terms of, I think, I have to get back to you on 913. I think it's a broader thing that has nothing to do with crypto, but that was a piece of it. We are looking at and withdrawing many of our pieces of crypto guidance from that era, though, as you know.
And I appreciate that. I hope that by withdrawing the guidance, that you're also instructing and admonishing your bank's supervisors to when there are
Fuck, why did these both not
efforts
close?
to
I should be completely flat
regulate
right now.
banks that provide too much discretion to
Why did it
bank
get
regulators to pick winners and losers from among the customer lists, the loan portfolios of banks.
Fuck.
It's antithetical to the American system of banking. And I do think that there was that kind of discretion unleashed on banks, and it had a negative impact, a real chilling impact on banks as they selected and banked certain industries and then debanked other industries and other people during the last 4 years. So taking the guidance documents and policy statements out is important, but also guiding the people that there are changes now and that they can no longer use their own subjective biases towards DEI and ESG and other things in supervising the banks is also a critical component of bank regulation.
I agree completely. And as you know, Vice Chair Bowman is actually a former bank supervisor, so she's very well placed to make that happen.
And I realize that she as vice chair is more directly involved in bank supervision. I hope that you will use your role to punctuate the importance of those changes
10-minute is testing
within
bearish.
the bank supervision function at the Fed.
We're going to have to move on.
Thank you.
I'm assuming your answer is yes. Senator Smith.
Thank you, Mr. Chair. Good morning, Chair Powell, and welcome to the committee. So Chair Powell, a few months ago, you issued a warning about the trajectory of our national debt. Speaking at a New York Times event, you said the U.S. federal budget is on an unsustainable path. The debt is not only at an unsustainable level, but the path is unsustainable, and we know that we have to change that. Would you still agree that that is true?
Yes, that's the one thing that I would always say, and that my predecessors have said, and that's the kind of the only thing we say about fiscal policy.
Exactly, exactly. And I would agree with that. At a time when Americans are struggling to figure out how to afford their lives and have low confidence in the economy, to add to the deficit now, as the big beautiful bill does, just strikes me as unsustainable. Now, I'm not asking you to moderate between Republican and Democratic policy differences on the big beautiful bill, but would you agree that the big beautiful bill adds to the deficit based on the data that you've seen?
I'm just not going to comment on the reconciliation.
Okay. Well, I will just point out to my colleagues that the CBO says that it adds to the deficit. The Joint Committee on Taxation says that it adds to the deficit. The Yale Budget Lab says that it adds to the deficit. The Committee for a Responsible Federal Budget says that it adds to the deficit. The Penn-Wharton budget model says that it adds to the deficit. And even some of my Republican colleagues, Senator Johnson, Senator Paul, say that it adds to the budget. And as Senator Johnson says, it's wrong and immoral. So I appreciate that you won't comment on any of this, but let me just ask you an economic question. Can you talk a bit about what impact a rising deficit has on our goal of lowering costs for Americans, especially in the Trump tariff environment that we are in right now?
I'm sorry.
What impact does a rising deficit have on our goal of lowering costs for Americans, particularly when we are in this Trump tariff environment, the unpredictability of that?
Right at 11, just the turn of the hour.
It's likely that when markets are pricing longer-term Treasury securities, there's something baked into that in the market's thinking about interest rates. What should be the appropriate interest rate? But it's hard to unpack that with any precision.
5 minutes
These
bearish,
are factors that have
10
lots of
minutes now
interplay
bearish, 30-minute 4-hour holding
between
bullish.
one another.
Yes.
Bearish.
Yes. And
bearish,
Chair Powell, could you just
bullish,
comment briefly about the sort of the potential risks of stagflation, where we have slower growth and higher inflation? I know this is something that the Fed guards against, and could you just comment a bit on the risks of that and what it means for regular Americans trying to afford their lives?
So we're not seeing that now.
Yeah.
It isn't really the base case that that's what we're going to see. But of course, that's a very difficult thing because, a stagnant economy wants more stimulus, but an economy with more inflation wants less stimulus. So
Right.
It puts the central bank in a hard place. We've warned of it, but it's honestly not something that we're facing or that we expect to face. But it's something we're monitoring is what's happening.
Thank you. I want to follow up on a question I asked you the last time you were before the committee. I asked about the impact of severe weather events, otherwise known as climate change, on home insurance costs. And you testified that, I think you said, if you fast forward over 10 or 15 years, there are going to be regions of the country where you can't get a mortgage because of the impact of the challenges of insurance companies just not being able to provide that. Since February, when I asked you that question, home insurance rates have continued to climb. A recent analysis about climate risk from First Street found that financial burdens from severe weather are driving up household costs and triggering increased mortgage defaults. Now, it's at about 8% now, but they project that by 2035, 30% of all foreclosure losses would be related to climate impacts, which is pretty stunning. Now, I realize this is a complicated issue because insurance is regulated primarily at the state level, though there are exceptions. Flood insurance and terrorism insurance are exceptions. But I wonder if you would comment on this. I'm thinking a lot about what impact this has on housing costs, which is a big component of inflation and a place where housing costs are rising higher than the general inflation rate right now.
Many things are driving up housing costs.
Yes, that's true.
It's of course mortgage rates, but it's also zoning costs and things like this for properties that are near the water, particularly, for example, we spend some time down in Florida. Property insurance just gets more and more and more expensive, and to the point where it also almost makes sense to self-insure. And that's because of just big losses. Companies are just putting that in their models, and they're charging what they need to, to charge to make a return. And if they can't get that, then they'll leave that state. So that seems to be what's happening.
I know I'm out of time, Mr. Chair. Thank you.
You're always polite. So,
Minnesota
gave her 22 seconds. Sis. Thank
That's
you,
why
ma'am.
they call me the Velvet Hammer, sir.
I didn't say that you weren't harsh as well. You're just nice when you do it. Like just right now. See, Senator Moreno remind me not to give Tina a compliment in the middle of the back.
Chairman Powell, just want to make certain I understand this correctly. Control inflation and maximize employment. That's it. Two things, correct?
Yes.
So let's take one at a time. Maximize employment. Do you care if every American makes minimum wage or makes a livable wage? Is that something that factors into your thought process? In other words, we have full employment, but most Americans are on substandard wages. Does that change your calculus?
Does it change my what?
Calculus. Does it? You can't. In other words, is it full employment is full employment? Every American has a
Gap
job,
fill on
but they're
SPX.
making minimum wage versus having a family-sustaining wage. Does that matter to the Federal Reserve?
It would matter to the country a lot.
I'm saying, does it matter to the Federal Reserve when you're making your decision?
Honestly, we don't really have the tools to affect that.
Right. So it doesn't factor in. Now that's different than us. The people of this country elect us to make certain that their wages are higher than inflation. And by the way, let the records show that real wages are up this year. So we've done that, not the Federal Reserve. Second piece of it is, let's talk about inflation first.
Well, we've helped control inflation, which is part of that.
We're going to jump right into the inflation conversation. There's different kinds of inflation. There's different causes. There's not witnesses to inflation. There's key actors to inflation. Would you agree?
Sure.
Okay. So let's talk about the actors. Did you comment during COVID lockdowns that was a bad idea, meaning that you're shutting down the entire economy? It's not a button. I hit the button, you can hear me. It's on and off. COVID wasn't that. We just shut down the economy. Any comments on that?
Of course not.
Okay, so you didn't comment on that. Vaccine mandates, something that my Democrat colleagues loved. If you don't get the vaccine, you're a terrible human being. You can't go to work. In fact, Joe Biden was overruled by the Supreme Court because he said that if you work in a company with more than 100 employees and you don't get vaccinated, the company has the ability to fire you, unless you prove that you're negative on COVID. That obviously is a supply chain shock, wouldn't you agree? If I'm running an assembly line and now I have to put my people 6 feet apart and now I have people quitting or not coming to work or I have to fire them, that's a supply chain shock, wouldn't you agree?
I mean, it's a medical thing that you
No, but it's a supply chain shock.
George Washington.
I'm not asking you to make a medical decision. I'm asking you to make a Fed decision on inflation.
Way outside anything we would comment.
But it affects inflation because supply.
It didn't, in fact.
Are you saying that supply chain shocks don't affect inflation?
They do, but that
Okay, they do.
didn't.
So that's clearly one. If you ban the export of liquid natural gas, which is going to cause the commodity price to go up, would that supply shock not also cause inflation?
Potentially could.
Yeah. So, and now the ranking member loves to talk about billionaire corporations, that are going to get away with paying taxes, right? Who pays corporate taxes? Like, who pays it? Is it like some obscure Wizard of Oz character behind a curtain that is a corporate entity that pays taxes? Who pays taxes?
I mean, ultimately, it's shareholders and customers.
So I'm going to read you a line. You tell me this is accurate. On taxes, it's not possible to know in advance precisely how the costs will be shared for taxes. I added
Correct.
that.
I would
But
agree.
it is highly likely that consumers will pay a meaningful share. Meaning if the ranking member has her way, let's just tax corporations at 100%. Why not? Be fantastic, right? Oh, nobody would want to start a company, but that aside, that cost would be added to consumer products, correct?
A tax or a tariff? What are you talking about now?
If the income tax for American corporations goes up, they will share that tax burden with their consumers. True or false?
Yeah, ultimately.
Yeah. So then taxes do raise inflation, but you don't comment on.
I mean, they haven't.
And you don't.
That's
but you
just
don't.
not true. I mean,
I got
empirically, it's not true.
The chairman's going to beat me up in 56 seconds. So, but you sent me a very nice letter, which I appreciate. And it says the Federal Reserve plays no role in commenting on trade policy. So you don't comment on supply shocks. You don't comment on tax policy, which clearly affects inflation. You don't comment on demand pull. You just said now that we should forgive student debt. Why is a person that goes to Harvard, that gets a gender studies major, pays Harvard obscene amounts of money because professors are grossly overpaid there, is that person better than a working class Ohioan that is a plumber but can't afford a car because interest rates are too high and car prices have gone up? Why don't we forgive that person's car loan instead of forgiving their student loan? But you don't comment on that. You comment on tariffs. So I'm going to just show you.
I don't comment on tariffs at all, actually. I comment on
only
inflation.
commented on tariffs. You've
I'm
only
commenting on the
tariffs.
wisdom of tariffs.
Look, the chairman's over there in the conversations. I'm going to show you a chart here. This is car prices.
I'm paying attention, however.
This is car prices since this year. Come on. Car prices are down. Car prices are down. Inflation in America is down. We got elected by millions of voters. You got elected by one person. He doesn't want you to be in that job. And you are costing this government $400 billion a year by refusing to lower interest rates. Nobody in this chamber has that kind of power to have a $400 billion impact on this economy, on our deficit. And I just think that you should consider whether you're really looking at this from a fiscal lens or a political lens, because you just don't like tariffs.
Senator Warnock is next.
Thank you, Chair Scott. Thank you, Chair Scott, and thank you, Chair Powell. Good to see you. The United States national debt currently exceeds $36 trillion. Last year, we paid nearly $1 trillion in interest on the debt alone, more than the federal government spent on educating and feeding our children. Chair Powell, how does the Fed consider rising national debt levels during discussions about adjusting interest rates?
We really don't. We take fiscal policy as completely exogenous, and we look at the data that's coming in, but we don't, we're never going to take into account budget deficits and things like that.
Well, here's my concern. Maybe Congress should be thinking about it. The world is losing faith in America's ability to repay our debt. We have seen a sell-off in the bond market. The United States dollar has lost more than 10% of its value against the euro and pound, and is down against nearly every single major currency in the world. Back in May, Moody's downgraded the U.S. government's credit rating because of growing debt and sinking confidence in lawmakers' willingness to address this issue. Historically, high debt pushes up interest rates, slowing economic growth and setting up a dangerous debt cycle where both interest rates and debt continue to rise. Chair Powell, how does the size and the trajectory of the national debt affect the Federal Reserve's ability to manage inflation in good economic times and spur investment and hiring in slower economic times?
I'm happy to say that today, those things do not affect our ability to do our job. The concern really is that if we don't do something, then there will come a time at which it will be a problem, not for us, but for the country. But that, at this time, it does not interfere in any way with our ability to do
that. Is a realistic concern in the future, given the rate of increasing debt. And it's something I'm concerned about, and maybe because it's in the future, maybe that's why, folks who have power, who sit in these jobs, aren't as concerned about it as perhaps the Congress should be. I'm concerned about it as a father of a 6-year-old and an 8-year-old. I'm concerned that my Republican colleagues are planning to ram forward a bill that, according to the Congressional Budget Office, will increase the deficit by $4.2 trillion. So I want us to think about that. We're taking food out of the mouths of hungry children. This bill could cut as many as 16 million Americans off of health care. When we think about Medicaid, 71% of the Medicaid recipients in Georgia are children. So we're taking their health care, and then we're saying to these children that you'll have to deal with these trillions of dollars in debt one day. $4.2 trillion increase. Senate Republicans are trying to use a budget gimmick to claim the bill only costs a fraction of that by simply not counting things they don't want to count. If they don't like the math, they just change the formula. But the markets and those investing in our country don't care about these budget tricks. And I don't think it will help my 6-year-old and my 8-year-old when the bill comes due on this. They know the truth, and they will react based on the truth. The big ugly bill will put the United States on a disastrous fiscal path, and it will be catastrophic for our economy. Even worse, the big ugly bill is cutting people off of their health care, and for what purpose? To give tax cuts to the wealthiest. So this is an interesting moment for me, for someone who didn't know I'd end up in politics, who just paid attention to politics over the years. They're getting ready to create a whole lot of pain for a lot of people. And the question is, for what purpose? To give billionaires a tax cut. I think we ought to work together to prioritize extending tax cuts for the working class. We shouldn't be cutting their health care. We ought to save the country trillions of dollars by not giving more tax breaks to the richest Americans. And if we try to work together, we can save our economy from this disaster and still protect working families from a tax hike. I believe in tax cuts. I think working class Americans ought to receive them. And we ought not be burdening our children with all of this debt. With that, I yield, and the chairman should take note that the Baptist preacher is done with 3 seconds left.
And the people said amen. Okay. Senator Haggerty.
Thank you, Chairman Scott and Ranking Member Warren, for holding this meeting. And Chairman Powell, it's good to see you here again. Chairman Powell, I want to talk with you about inflationary and deflationary trends in our economy and how they impact your thinking. I understand, based on your testimony and recent statements, that you're acutely sensitive to the inflationary risks of our administration's trade policy. And though I note that it's not the Fed's responsibility to attempt to steer or to directly offset that policy in any way, I look at that, I look at your perspective, but I also look at many of the other developments in our country that I think present the opposite risk, which is a disinflation risk. And let me dig into this a bit. We're witnessing artificial intelligence adoption at breakneck speed. That's going to bring about productivity gains in nearly every aspect of our economy. We're about to pass a tax bill. That tax bill is going to encourage capital expenditures and long overdue upgrades to our manufacturing capacity, again, increasing productivity. And if you think about the concerted effort that's being undertaken by our federal government right now to reduce waste and bloated, unproductive government payrolls, all of these point to disinflationary productivity gains. So given the competing sources of uncertainty that we're talking about, it feels to me like the Fed's far more focused on tariffs and the inflationary impact of tariffs than on the deflationary impact of the points I just mentioned. So if uncertainty around tariffs is the primary reason that impacts your thoughts, I mean, how do you counter, how do you bring into account these disinflationary trends that I've just mentioned?
So we do look at the overall picture, and that's actually what's been happening is services inflation's been coming down, and that's been covering what we see so far, small increases in goods inflation. I would also mention a factor that you didn't mention on your list, which is regulation, which is an area which could also be over time disinflationary.
Potential double bottom in
we
the
do
Delta
regulation.
here on SPY.
I try to say that it's the broad sweep of policies.
All right, so we are seeing maybe a technical bounce. We're at the closing value on SPY. We did hit it on SPX, so there might have been some sitting orders in the DOM there to buy it off of it. A little bit of a double bottom situation between 11.14 and 11.22. As we're seeing a potential double bottom in the S&P 500, we are seeing the exact same thing play out in the Delta flow. We puked from 10.45 and it really sped up at 11 all the way to 11.14, double bottom here in the Delta. and now we're seeing a bit of a pump. Will it hold? Your guess is as good as mine, but what I could tell you is calls are being bought and puts are being sold. It is the double whammy. Once again, that's for the S&P 500 happening right off of the closing value from yesterday. With respect to the Mag 7, not the NASDAQ, the Mag 7, it's been slowly but surely grinding up ever since 1016. So a bit of a divergence. The options market is remaining strong, even though price got hit. You could see here on a relative measure from 1030 to 1130, price went lower, but that whole time the options flow has been grinding up, and it is because people are getting into calls, even as early as this Friday. More so for later down the line, but we're just seeing quite a bit of divergence. So like I said, I have no idea who's about to do what, but I'm just literally pointing out the divergence to you. And last but not least, the NASDAQ, literally the Qs, the NASDAQ 100, puking to about somewhere in here, and then also catching a bid like the S&P 500. So I'm in a bad spot. I added to my position, and I don't think that was technically a sound play just because I don't have much risk. I don't have much room to work with if it's wrong. So I very much need this to work, basically. But basically trying to buy it off this technical support, and I'm hoping that support holds as support instead of breaking down. But once again, when you come to these key levels of support or resistance, you don't know if it's going to hold. You don't know if it's a breakout, breakdown, fake out, breakout, breakdown, a complete reversal. You just don't know. Obviously, my overall mental framework of the market is identify the key levels and look for the market to react to it. We're identifying this key level that we're roughly seeing around 1110. It's the high on the Qs. It is the closing value on the SPY. And we're seeing how things either do or don't play off of it.
Say that it's a great thing that we're making progress toward a stablecoin framework.
Thank you, Mr. Chairman. I couldn't agree with you more. The direction clearly is that it's going to drive rates down. I think it's very positive for the economy, positive for our cost of borrowing as a nation. And I appreciate your response there, Mr. Chairman. Thank you very much. For
yes, sir. Senator Cortez Masto.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you. Thank you for being here. I want to follow up on a question from Senator Warner about data deterioration. I'm concerned about that as well.
Just another lower high.
The Trump administration, I'm watching as they've ended dozens of research studies that business and government leaders rely on. So my question to you, are there specific research projects that the Bureau of Labor Statistics provided that they no longer do provide, that the Federal Reserve researchers cannot replicate on their own or through other sources?
I'm not aware of any.
Okay.
That doesn't mean they don't exist, but mainly it's the regular data they supply. And as you know, they've cut back on the size of that survey.
Right. So I would hope as we move forward, and not just in today's hearing, but if there is some other data or you're relying on data that you're not getting, or there's now another source for that data, I would please share that with the committee. Thank you.
Yes.
During the Biden administration, the Federal Housing Finance Agency and the Federal Reserve worked together to improve access to the discount window for banks. What is the status of that collaboration with the FHFA?
I can't speak to the FHFA. I can speak to the fact that we're really looking carefully at modernizing the discount window and making.
But we're not there yet.
No, it's going to be. This is a project that will take some time. It's the discount window needs to be updated and refreshed from a technological standpoint so that people can access it readily and that kind of thing. It's still a little bit behind the age in that respect.
Do you have a time frame that you're looking at to?
I'll get back to you. It's something we've been working on hard.
Or is there a funding impediment that is also addressing this?
No.
So, okay, no. If you could.
We're moving ahead with it. I'll come back to you on that.
Thank you. In March, the Federal Reserve, together with the FDIC and OCC, announced that you all intend to repeal the 2023 Community Reinvestment Rule Reinvestment Act proposed rule. I prefer the proposed rule as it would better address the needs of states like Nevada that don't have headquarters of large banks. How will you ensure that the new CRA guidance improves access to financial services, to loans, to investments in underserved rural and tribal communities?
So I think in March we announced that we're putting out for comment really a proposal to withdraw the proposed guidance,
no
which become the
recovery there at
subject of litigation. And in the meantime, we're going back to the old CRA rules, and I think that's where we will be. I don't have anything more in terms of what we might change with respect to those old rules, but that's where
So
we
the
are.
default is are the old rules,
Yes.
and that's, those may be
CRA as it existed before
ongoing.
this proposal, which actually never took effect.
Right. Okay,
looks
that's
brutal
helpful.
on the spy.
Community banks benefited from
Dumped.
high deposits during the pandemic. Since then, the net interest margin for community banks has fallen. What specific challenges do you see for community banks, if any?
Community banks, are very important. We want a banking system that has all different sizes and shapes of banks, and community banks are absolutely critical. They know what's going on in communities and in a way that the big banks can't possibly. So they're a critical part of our infrastructure, and I think they've been under pressure because, frankly, regulatory costs have gone, fixed costs of regulation have gone up. We try not to contribute to that. The number of banks has been going down pretty steadily, and that's not something we're trying to foster, but it's a sort of long-run trend of really the last 30 years. So we try not to add to what is a secular trend because we think they're important.
Thank you. Thank you for being here. Appreciate it.
Thanks.
Ms. Chairwoman, I yield my time.
Who's up next? Senator Britt.
Thank you very much, Madam Vice Chair. Chair Powell, thank you for being here with us today. I want to start just by echoing the comments of Senator Cortez Masto when it comes to community banks. Obviously believe that community banks and credit unions, financial institutions that serve everyday Americans and main streets across the great state of Alabama and our country are so critically important to people being able to actually achieve the American dream. And want to make sure, I know we've talked about this the last few times that you've been in front of us. We've talked about the rewrite of Basel III. We've talked about long-term debt. We've talked about Reg II. We talked about a ton of things and talked about my concern that no one was looking at the cumulative impact of those things and the trickle-down effect. I just want to get a commitment from you that as you are reviewing rulemaking across the board, that you will consider and make sure to make the perspective of the smallest U.S. banks and non-financial industries like the ag sector who did not maybe have a seat at the table in previous administrations, but give them a seat at the table and make sure that you're thinking about the impact on those individuals and the people they serve.
I'm happy to make that commitment.
Thank you so much, Chair Powell. I also want to talk to you about an issue that has been brought up briefly today by another colleague of mine, but that is about childcare. So when we look at the childcare crisis in this country, we know that our economy loses about $122 billion a year because of affordability and accessibility, reliability, if you will, of childcare. It is said that anyone who has a child between the ages 0 and 5 actually spends 22% of their income on childcare. We have done the studies and looked at the numbers, and 59% of stay-at-home and or part-time working parents say that they would like to re-enter the workforce, but that affordability or accessibility is an impediment to do that. As we are looking to build back America, as we are looking to create opportunity and bring those things into fruition, would you agree that taking a look and being able to address, not asking you to comment on any specific proposal, but addressing some of the shortfalls related to accessibility and affordability of childcare would have a positive long-term impact on the economy?
So I think there's quite a bit of research showing exactly that, and we really saw it during the pandemic. As I think you know and pointed out, it's not an issue that we play a role on, but clearly it would contribute. Childcare would contribute to participation in the labor force by many.
Absolutely, and as Alabama looks, we look at our labor participation rate. It is 5 points lower than the national average. We continue to look to ways to get people re-engaged in the workforce and know that addressing this head on will help us be able to achieve that. So thank you so much, Chair Powell. I look forward to continuing to work to get that done. So there has been some angst vocalized about the reconciliation bill and the president's trade policies. And from my perspective, much of that skepticism is both unfair and premature. Market resiliency and recent economic data actually continues to reflect confidence in the U.S. economy. Look at the recent Treasury auction, which was notably successful and saw stronger than expected demands for 30-year bonds and stable, even slightly declining yields. To me, this demonstrates that investors still view the U.S. debt as an attractive asset, regardless of the ongoing policy discussions and debates and forging a pathway forward. And those fundamentals of the economy, actually remain quite strong. Chair Powell, would you agree that the components of our economy actually remain quite strong? And how does the Fed consider this type of strong auction performance in the context of your market expectations and monetary policy discussions?
So, as you point out, the Treasury market is working fine just now. Liquidity is adequate, and bond prices are responding to economic events, and so bond market's in good shape. In terms of the strength of the economy, I would strongly agree. The labor market's in a solid place. The economy's growing. Inflation is in a pretty good place, come much closer to 2%. So it's a very solid economy. We are watching the labor market very closely, as we always do. And a couple of things in particular. One is just a very low hiring rate, which goes with a low layoff rate. But if we were to start to see layoffs, we would see unemployment go up quickly, and so we're watching that carefully. But the labor market has remained solid, and I would agree with your overall characterization.
Thank you. Appreciate you being here today.
Thank you, ma'am. Senator Kim.
Yeah, thank you, Chairman. Thank you for coming before us today. You've often said in the past that when it comes to monetary policy that it works with a lag, right? That this is something that you're having to try to assess the data that's before you.
Right.
I'm thinking about this because we have the Federal Open Market Committee, FOMC 5-year review, and you were talking about tariffs and the uncertainty of this moment. So I guess I just wanted to ask you, how do you balance sort of assessing between more of the backwards-looking data that you're able to look at more tangibly in that way, but also addressing sort of forward-looking models to try to understand where things are heading?
That's really the challenge that all forecasters have, and really monetary policy needs to be forward-looking. At the same time, we need to be humble about our how hard it is to forecast. So, particularly at times of high uncertainty, which I would say I would include now, you really want to look at the real data and take signal from that, and not be too brave about what your forecast might be, because it's going to be highly uncertain.
So you're saying that in times of greater uncertainty, in some ways that makes you more interested in the backwards-looking data to sort of guide you?
Well, I'd almost flip it around. Yes, but I'd almost flip it around and say at a time like that, you don't want to be giving a lot of forward guidance, and you don't want to be acting as though you have a lot of certainty about the path forward. It makes sense to move more slowly in most situations where there's more uncertainty. There are situations where it would not make sense to move slowly, but in most cases, you'd want to move more slowly.
Yeah, that's interesting. I mean, I talked to some of my constituents back home. There's this one conversation I had that has really stuck with me, where, a woman was telling me that, there's so much uncertainty right now in the world and certainly in her life that she says it's hard for her to even breathe sometimes. She just feels this kind of weight upon her chest. And I've thought about that a lot, because I try to think through what can we do to try to alleviate that concern, alleviate that anxiety for people. But you can see it. I mean, right now, whether it's about what's unfolding in the Middle East and the fragility of what comes next. When I look at this reconciliation bill before us in the Senate, I do worry not just about the deficit, as some of my colleagues have mentioned, but about the potential of significant job loss that we're seeing, whether in the healthcare industry, whether in the energy industries. And certainly when it comes to tariffs, as you said, trying to think through what comes next in terms of whether deals are struck and at what levels. Are you taking into account that by sort of an issue-based level, or are you looking at sort of the global instability in terms of the different crises that are out there? Is that factoring into how you're thinking about when we're talking about legislation here? I know you're not going to go into the policy per se, but if there's a potential for significant job disruption Is that something that you're looking into as you're forecasting?
Yes. We obviously pay great attention to global events and in an effort to understand what's going on in the economy globally, because that does matter for our economy. So we pay close attention to all of those things and track them. Ultimately, though, we're looking at the U.S. economy and what are the fundamental drivers here, and then making a judgment based on all of that. And mainly, this is a big economy, and we're geographically separated from most of the other big economies in the world. So we have a smaller external sector than most of the all the European economies, for example. So we're really looking at the U.S. and what's happening here.
I wanted to ask you because, in central banks in other countries, including Bank of England and European Central Bank, they've begun modeling the potential macroeconomic effects of artificial intelligence. They're thinking about how they can use AI to be able to do some of the forecasting, to think through what comes next. I guess I wanted to get a sense of what the Federal Reserve is thinking in terms of similar work in the AI space.
We have lots of people doing work on AI and more than that, even monitoring research that's going on everywhere in the world. And, speaking of uncertainty, it's very clear that it has the potential to make really dramatic changes in our economy, in our workplace, in the jobs of workers, in the way companies work, and all of those things. But it honestly, there's a tremendous uncertainty about the timing of that and what the ultimate consequences will be and what the medium-term consequences will be.
I was wondering if the Fed is evaluating AI credit models and how that could potentially deepen disparity in credit access or violate fair lending standards. Is that something that you've looked into at this point? And
yes, absolutely.
Is the Fed looking to potentially affirm some industry standards on this?
It's something we've been aware of for a long time. There's a lot of research that's been done. Before generative AI came along, it's also just machine learning and technology generally. You need, there are implicit biases that can appear. It's something we're very well aware of, and we do work with people to make sure that doesn't happen.
Okay, thank you. I yield back.
Thank you. Senator Banks.
Thank you, Mr. Chairman. Chair Powell, can you talk about how our interest rates compare to other first-class countries around the world?
At the higher end.
And how does that affect the United States?
Well, I think that reflects a couple things. One is just that the U.S. economy has outperformed, has been stronger than others. I don't want to pick on any other nations, but many other nations have had much lower growth, now have lower inflation, and are, have pretty low growth, whereas the U.S. economy has really been the outstanding performer and remains that to this day. That implies somewhat higher rates.
So you say it's higher than most of first-class countries. Can you talk about historically where we've matched up with other countries?
Yeah, so let's just go back to when the pandemic hit, for example. We were we had very low rates during that era, but they were by far the highest in the developed world because the U.S. economy was the strongest. The European Union had negative rates. I think the Bank of England was at 75 basis points. I think we were at 2.4%, so we were meaningfully higher. And again, it was a time when we were our growth was higher, and their growth was lower, and their inflation was lower. Our inflation was fine, probably about the same as ours. So I think we've generally had a little bit higher rates than those countries because they have slower growth, older populations, lower productivity, those kind of things. We have the strongest economy in the world.
Globally gone up as well?
Sorry?
Have interest rates in those countries globally gone up as well?
Well, they went up.
The US?
All of those countries had their rates go up quite a bit during the global pandemic inflation, right? And as you know, many of them have been cutting their rates, and we had been too, and we'll at some point resume that. But we're 100 basis points lower than we were. I think if you take the EU and the Bank of England, they've both cut a little more than that.
How recently?
Recently, but But I think you probably read this, but they're either at or close to the end of their cutting cycles.
I know there's been a lot of talk today about deficits and the national debt. But how much does tax policy affect the economy in the U.S.?
I mean, it has big effects over time. It's really not something that drives what we do. It isn't. But I think tax policy plays over the long run a huge role in incentivizing investment, which helps growth and things like that. I think it's very, very important over the long run. Certainly more important than monetary policy.
Would a $4 trillion tax increase on middle-class Americans affect the economy?
Now here we're getting into the bill.
I understand. I'm asking how that would affect the economy and according to your data.
I'm trying to not make any direct comments on the bill today, if you'll forgive me. But I take your point.
Okay, I am trying to make a point, but there's got to be data that you sit on somewhere that would suggest that large tax increases would affect the economy, would stall economic growth in the U.S.
You could certainly get that out of a model if you wanted to. I mean, but again, I'm inevitably going to be commenting on the bill, right? If I answer that question, a lot
of talk today about inflation. You've already agreed that inflation is down from where it was a year ago, and would you say steadily declining?
Has been, yes. I more than agreed to it. I'm very pleased by it.
And all of the experts and so-called experts tell us that tariffs lead to inflation. But you seem to have suggested already that inflation is, if not under control, close to being under control.
So inflation's in a really good place. It is definitely in a good place. And, we have a forecast, and so does, by the way, every other, brand name forecaster in the country, which is very similar to ours, that there will be some inflation from tariffs coming. Not yet, but over the course of the coming months. And I think it's reasonable to expect that because someone has to pay. This is hundreds of billions of dollars of tariffs we're taking in. Some of that's going to fall on the consumer. Not all of it's going to fall on foreign manufacturers. And that's the only insight we have, and we're just kind of wanting to see more data on that before we move.
One final question about data. Our trade deficits with China, the EU, Canada, and Mexico have all significantly dropped recently. What does the data tell us about that?
Well, I think that's
how that would affect inflation.
How it would affect inflation. I don't know that it has implications for inflation, but it obviously reflects the tariffs. I think recently you've seen Chinese imports come down quite a bit.
Thank you. I yield back.
Thanks.
Senator Blunt, Rochester.
Thank you, Mr. Chairman and Ranking Member Warren. Chair Powell, welcome back. Inflation has come down meaningfully from its peak. And there are signs of moderation in the broader economy. But prices for rent and other essential services remain high, and the outlook is still uncertain. Wage growth remains strong, but productivity trends are mixed. And demand for places to live is high, but borrowing costs and material shortages are making it harder for builders to keep up, adding to the affordability pressures. And at the same time, while I know this is not something you would say, but at the same time, while our Republican colleagues are pushing for tax cuts for the wealthiest Americans that would expand the deficit, the administration's trade and immigration policies are also introducing uncertainty that may not yet be fully reflected in the economy. For families that I represent, the cost of living remains painfully high. Premature easing could have unintended consequences that undo the progress we've made. Later this year, the Fed will update its monetary policy framework to respond to today's inflationary environment. And after years of supply shocks, housing inflation, and fiscal volatility, I hope you will remain strengthened that the Fed's ability to navigate the more uncertain economy. And as you undertake this update, can you talk about how you're adapting the framework to these realities while preserving the Fed's commitment to full employment?
I'd be glad to. So we made changes in the year 2020 to our framework, and those were meant to take on board the special issues that a central bank faces during the era of extremely low interest rates, where rates were never very far from zero. In fact, we just barely got away from zero when we had to cut back to zero. And the feeling was very much that if we had any kind of a shock, we'd be back at zero for years on end again. And that's really not a good thing because the economy can become very stagnant. So what's happened since then, the big thing is interest rates are back to much more normal levels historically. So our policy rate at 4.3% actually doesn't feel like it's particularly restrictive. So it's, in other words, rates have moved way back up. That means that the effective lower bound is less of a problem. It means that the changes we made in 2020 are less relevant. They're not completely irrelevant. So we're making modifications, which we'll be discussing inside of our committee now in the next meeting and in the next meeting, that will return the forecast more to what it was before the 2020 cycle.
I know we had a chance to talk in the past about my focus on jobs and the economy and labor. And I want to follow up on Senator Kim's questioning, where the focus on the changing technology landscape and with artificial intelligence, generative AI, and just its impact on the economy and labor market. How would you describe AI's impact on the economy so far, and how is the Fed measuring it?
The effects of AI are probably not great at this time, generative AI, and the question is how great will they be and how big will they be and how quickly will that happen? And anyone who's been exposed to what AI is capable of has to be pretty stunned by what it's capable of. And this is even the early days too. You know, what the experts tell us is that, you know, in 2 years, these things that you're doing, that'll be nothing compared to what we can do in 2 years. So I think it has enormous capabilities to make really significant changes in the economy and the labor force. And, you know, it can either augment people's productivity or it can replace people or it can do a little bit of both. Right. But it's going to be something.
You preempted my question, actually. I saw a recent article, and a CEO of an AI company actually said AI could, quote, wipe out half of all entry-level white-collar jobs and spike unemployment to 10 or 20%. And I think he said in like a matter of a year or two. Do you think this is a reasonable perspective, and how would AI-driven productivity gains or worker displacement affect how the Fed defines full employment?
I don't know whether that's, I'm not the person to say how quickly that will happen. What's happened before with technology is it just seems to take a long time to be implemented. You know, there's the technology, what it's capable of, and there's what it actually does when implemented. That last phase has tended to take longer than people expect. Will it happen with AI? It probably will, but in terms of maximum employment, the Fed doesn't have the tools to really address the social issues and labor market issues that will arise from this. We don't have those tools. We just have interest rates, and you know, we'll always be able to balance the labor market so that supply and demand are in balance. But things like what AI does and what other things do from the outside, we just have to take them as they come.
Thank you.
Thank you. I yield back.
Yes, ma'am. Senator Tillis.
Thank you, Chair, for being here. I didn't expect to talk about it, but since AI came up, I mean, first off, we need to welcome it, exploit it, and benefit from it. I've had my staff try and go back and look at some of the congressional hearings in the times of the Industrial Revolution and other instances where we've had these threats of displacement, and it worked out okay for us. But the key is this is a global competition, and other countries are going to implement it. It is going to drive down their costs, and it will make us less competitive if we don't meet the challenge and become the innovator. But the transition is very important to note. I want to talk about SLR for a minute. I think you all indicated the balance sheet's going to continue to shrink. We're not going to get to pre-COVID levels, which was, I think, somewhere around $4 trillion. I guess the question is, you guys expect to hold higher levels of central banks to hold higher levels of central bank reserves than we have in previous years. Do you agree with that?
I don't think we'll get all the way back to where we were, but we're still shrinking.
Is it fair to say that the SLR should be updated to reflect the evolving preference?
Yes.
Thank you. Fed now. It's cost $545 million. You know, Chair Powell, I've never really liked Fed now, so it's probably not a friendly question. But spent $545 million to implement it now. I think you're expected to spend another $245 million in 2025. So the total price tag is $1 billion. As you know, the Money Control Act requires the Fed to cover all the direct and indirect costs actually incurred. So can you give me an idea of when we're going to see a fee structure that's going to generate and actually pay for this implementation, including the expected ongoing operational cost?
So you're right. That is our obligation under the law is to have it be self-funding, and we have a period during which that's supposed to happen. Yeah. Uptake has been steady but not rapid, and usage has been. Is it your sense that
you're going to be able to get to that, and that the fee structure that you're going to need based on that take rate is going to be achievable?
I think it's probably still achievable. I am not 100% clear that we're going to achieve it very soon.
That'd be it. Yeah, that's what I'm concerned. And I wonder if that pricing is there, given private sector options, if you're ever going to be able to get there. So just an editorial comment. One thing I did want to mention, I'm excited to see some of my colleagues on the other side of the dais concerned about the debt. Because last time I checked, over the 4 years that President Biden was in office, we had the American Rescue Plan that cost us $2 trillion. We had the Inflation Reduction Act that cost us $1 trillion. And we had the PACT Act that many of my colleagues, I was one of 9 Republicans that didn't vote for it, that also cost us $1 trillion. So I'm excited to see that my colleagues on the other side of the aisle want to get serious about spending within our means. I did have a question, I think, for my staff wanted to ask about, sorry, I just want to get my notes right. I actually wanted to go, I don't have it before me, but what's the current status in your view on Wells Fargo's capital requirements?
On their capital requirement, well, I think you mean on the growth cap?
Yeah.
Yeah, so we voted unanimously to remove that after many years of having it in place. They did satisfy the requirements we'd put in place, and we removed the cap along with the other agencies.
And you think your fact-based decision, you stand by it?
I do.
Very good. Last thing is Walmart. I've got other questions I'll submit for the record, Chair, but Walmart on April 9th, I think, withdrew their forward guidance. And they indicated the reason that they were doing that is there was uncertainty, and it seems to have been timed somewhat with the uncertainty around trade. So I would just suggest for my colleagues, I don't know if you can respond to this or not. I won't ask you a tax question, but I really want to. But I know what your answer is going to be. You're a good dancer. I think that it is fair to say that if there is going to be a correlation to increasing prices, and Walmart having made the decision to withdraw their guidance is probably the best testament that they know that they may have to deal with cost and maybe inflationary uncertainties. Would you characterize that as maybe a likely reason that they withdrew their guidance?
It might be. I saw that they had. I didn't have a chance to go back and check why.
Well, if you tease through the language, it seems almost certain that they think that some of their input costs were going to go up, and they need to manage their margins. So I'm just telling my colleagues, we just need to be realistic that if you have a major household name withdrawing guidance because of uncertainty, they've got a lot of experts that probably are suggesting there may be some inflationary risk. We haven't realized it yet, but I think we all need to keep our eyes open and not look past it so that we can manage it if it comes to pass. I don't think that there should be a problem with that.
Thank you.
Now, the last thing that I just want to mention is that you can't respond to this, but I will tell you, if the Democrats succeed in preventing us from avoiding the biggest tax hike in the history of this country, it is going to cause great damage to the people who can least afford it. You don't get to respond to this one, but folks.
Senator Alsobrooks is next.
Oh, I'm sorry. I didn't realize she was here.
Yes.
I'm sorry.
We were allowing
but we
him
need to
stall
open
till
that.
you got
We need to be open. We need to understand that you will have something to fix if we fail to continue the tax cuts.
Thank you, sir. Senator Alsobrooks.
Thank you so much. First to Chair Scott and Ranking Member Warren, thank you so much for hosting today's hearing. We thank you also, Chairman Powell, for your tremendous service to our country. I very much enjoyed the meeting that we had earlier this year and look forward to working with you. Many of my colleagues today have been listening to this hearing, have rightly discussed concerns regarding how tariffs are affecting consumers and businesses. And I'd like to highlight a specific business in Maryland that encapsulates the harm that I believe this administration is inflicting, but also the resilience of a proud Maryland small business. Bay Dog is a successful pet brand based on Kent Island, one founded by Barton O'Brien, who's a Marine veteran who served 3 combat tours overseas. Mr. O'Brien has calculated that if he were to make his products in the United States, he would have to raise his prices 400% just to break even. The tariffs, he believes, are a burdensome tax that could put companies like his out of business. But the damage doesn't stop there. Bay Dog is sold in thousands of other brick and mortar stores across the country, all locally owned small businesses who similarly have to raise prices or lose sales to pay the president's tax. Mr. O'Brien started planning for this last summer when President Trump started talking about tariffs during the campaign. He stockpiled inventory and has committed to keeping his prices stable this year. But what Bay Dog is asking is, what is he to do if the tariffs are in place next year? Mr. O'Brien has calculated that he won't have to just raise prices. He'll likely have to cut his staff to stay in business. So, Chair Powell, there are 34 million small businesses in America, 1 for every 10 people. And if small businesses like Bay Dog have to lay off staff or go out of business altogether, what will that do to unemployment in this country, and what effect will that have on the broader economy?
I mean, just mechanically, I don't want to comment on particular tariff policies, but sure, if companies go out of business, then that'll hurt employment and activity.
And what we will see is, of course, and we have so many small businesses, what we're facing now is that very prospect, is that we're going to have so many, and we believe that, you know, the inflation caused by these tariffs will really have a very negative impact. And if this is the case, what would this mean for American workers?
Well, the other thing is, I think the tariffs are still in motion. You know, it's premature to say exactly where they're going to land. So we're kind of withholding judgment until we see more. That's kind of where we are. We haven't made a decision to do anything. It's just we want to see more. And the situation evolves day by day, month by month. So.
Okay. Well, in another question, in our meeting and in your most recent monetary policy report, you spoke of the long-term challenge of housing supply not meeting demand. And I look at this issue the same way I did as county executive, where I really fought hard to leverage private and public sector dollars to bring more housing to communities that needed it. Maryland has a shortfall of nearly 100,000 homes, and the pathway to build wealth is therefore narrowing. So studies have estimated that of the over $200 billion invested annually in housing in recent years, only a fraction supports affordable homes for working class families. So would you speak to the need to better incentivize private investments into affordable housing construction? I'm working with a private sector and nonprofit stakeholders on legislation now, but just wanted to know if you could comment on that.
So I would say this: interest rates are slightly restrictive at this point, modestly restrictive, and that is weighing on economic activity in the housing market sector. But you're really talking about a different problem. It's not one that the Fed can really address, and that is we have a longer run housing shortage. So many other advanced economy countries have this too, and it's not our tool. Our tools don't really work to affect that. It's really elected people, and you saw this as county executive. It's things that the legislature can do that can really address that. Not us. It's not about interest rates.
All right. Well, now I understand one other issue. The Fed is evaluating the leverage ratio rules regarding the amount of capital required to be held by banks to withstand unforeseen risks. And I'm hoping you can then provide some insight as to what potential changes this framework are meant to achieve. On the other hand, I understand that access to capital is paramount, particularly for communities I represent. So, and I understand concerns that a change in these requirements could affect the resilience of the banking sector. Though I know you cannot speak to the specifics, of the coming proposal, would you share some insights into what problem the proposed rulemaking is meant to solve, and are you concerned that it could lead to a deterioration of resilience of the banking sector?
I'd be glad to. So the idea behind it is that we want risk-based capital to be the binding capital requirement, because we want the binding capital requirement to be, we want banks to be sensitive to the risks that they're taking. If the leverage ratio is not risk sensitive, it treats every asset as equally risky. So if that's binding, then that interferes with banks' incentives to manage their risks and actually discourages banks from taking on relatively low-risk activity. So we've always, at the Fed, wanted the risk-based capital to be the binding one and the leverage ratio to be the backstop. And so that's this proposal that we have that we're going to be meeting on in a couple of hours, puts out for comment a proposal to restore the the backstop characteristics of the leverage ratio. We think it should make it will not in any way diminish the safety and soundness of the financial system, and it will allow for banks to undertake lower risk. Thanks.
Thank you so much. Thank you, Mr. Chair.
Yes, ma'am. Thank you. For senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Wednesday, July 2nd. Chairman Powell, you have 45 days from that day to submit your responses to the questions. For the record, thank you for being here. This committee is adjourned.
Thank you.
This committee is adjourned. All right, let's clean up this. Let's clean up that. Well, kind of the same vibes of yesterday in terms of what was said by Powell. A bit of a nothing burger. If anything, I think Trump's commentary at NATO that was also right at 10 a.m. was a little bit more spicy, a little bit more interesting. Price structure is bearish. Obviously, when you have a succession of lower highs and lower lows, that by definition is bearish. We had a shot at 1045 to recover, and basically we put in this low, we bounced off it, we took out some highs. So this at here was by definition a fake out. We failed. We did put in a new local high, and as quickly as it happened, that's how quickly it got destroyed. With respect to options, you could see the same thing happen. Big pop in options, and then just faded. This is for the S&P 500. Well, what's weird is the Mag 7 and the S&P 500 have not been agreeing. So the Mag 7 also got that pop, and then is kind of awkwardly holding it. Right now, ever since about noon o'clock, we're giving a little bit of it back. And then looking at the NASDAQ, same thing as the S&P 500. We popped and just got smashed. And what I find to be the most interesting about today is if you look at the difference right about here, look at the light blue. Puts have been puts were sold, puts were bought, sold, bought, sold, bought, sold, bought, sold. Hugely bought, hugely sold, hugely bought. And now these puts are fading. So this is very interesting, jagged action for the 0 DTE puts. Well, I mean, even the calls, huge amount of buying, little bit of selling, huge amount of buying, little bit of selling, huge amount of buying, little bit of selling. Obviously, I have no clue who is executing these trades. I don't know if it's the bots just not knowing what the hell they're doing. But what I can tell you is that price structure is down, lower highs, lower lows at this point on the day, up until about 12:10. Lower highs, lower lows on the NASDAQ as well. In terms of momentum, the 5-minute and the 10-minute are now bearish. The 30-minute and the 4-hour are holding bullish. So that basically just means you have to wait because there's a mismatch between the shortest time frame and more of these medium time frames. Similar situation in the NASDAQ. 5-minute and 10-minute are now bearish, and the 30-minute and the 4-hour are holding bullish. So there's funkiness in the options market. There's a mixed match in terms of momentum. And then with respect to intraday price structure, the bears are clearly in control, just lower highs, lower lows. So right now, if I had to grade today, I would say it's a neutral day leaning bearish. And the reason it's leaning bearish is because of the price structure, lower highs, lower lows. But the reason it's somewhat neutral is because the 30-minute and the 4-hour are actually holding green. And if you look at it, the SPY and the Qs are still green on the day. So it's it's like a neutral, oddly, I don't know. It's like a weak bullish day, if that makes sense. And at that point, it kind of depends on the data you're looking at. Price structure, intraday down, medium time frame, it's still bullish. Momentum, short term is bearish. Medium term frame, still bullish. Options flow is just nutty. And we're also now at midday where just like nothing's going on. So we're just at this like awkward bullshit point where you just have to wait for that low risk. I took a stab at a couple bullish opportunities. Clearly, they did not pay out. I think I got personally a little bit too excited by this right here, this 1040 pop that we also saw it in the options market. There was just no follow through. When there was no follow through and we got the breakdown here, I should have cut. I clearly should have cut at 11. I just didn't. I was being pig-headed. I was being stubborn. Obviously, it cost me. So that was just like stupidity on my part. I was just like a little bit too overly confident in the recovery. And the sad thing is if I cut right on that breakdown at 11, I would have sustained a loss, and I still bet later on this afternoon there's a better chance of a pop than anything else. So had I taken that loss, I could have caught the long in the afternoon and got my account green on the day. But I was just being too pig-headed about that individual trade. So I was focused on the individual trade rather than the larger system. And obviously it cost me. So it happens. Like, that's just, if anything, it's just a learning lesson and move on. So the accounts are still live on one contract. I was at least smart enough to like simmer down a little bit and switch it up to one contract rather than being two. If I had two, I probably would have lost all the accounts. So I still have that long position on, which you could argue is a little bit of a hopium for the recovery, but hey, 50-50 shot. I mean, we are at a key level. We are at the high on the Qs. We are at the closing value on the SPY. If enough buyers come in, yeah, we could push it and close. If enough sellers come in, yeah, we could vomit, and then it's back to the drawing board. But yeah, it's just, it's 100% my fault. Like, this was the point to get out. I just basically refused to let go of the short term. And when I say short term, I mean like sub 1 hour time frame bullish theory. On this pop at 1040, I was like, cool, I'm right. We made this low. It's a fake out breakdown. We're going to keep going. And when it got faded relatively quickly going into the 11 a.m. hour, literally just refusing to think that I was wrong. And obviously I was wrong, because that's what the market does. It's a nice slice of humble pie real quickly. So it's a bummer, because if I were smarter, I could just wait for the reversal, play it, make a shitload of money. But instead, your boy was just being stupid. So I still have, I'm still long one NQ. My average fill is 22,469. We're trading at 444. So I'm down by about 25 points, about $500. Unfortunately, I have a lot of distance to go to make that back. Isn't this week you got burned for being permable? No, this is my first loss of the week. And also, it pays to be a permable. Have you looked at the stock market? Like, literally, that the people who make money in the long term in the market are permables. I don't know if you've seen the stock market and the history of it, but what pays is to be a permable. So you're saying that as if it's a bad thing, but like literally that's who makes money in the stock market. Perma bears get destroyed like year over year. It always pays to be a bull, like 100%. So I would not say being a perma bull. You're saying it with a negative connotation, but anyone with like a functioning eyeball could look at a chart and realize that it pays to be a perma bull. That the market just trends up. High quality stocks trend up. That's how this game kind of works. Bro, the point is that you were literally being an ass hater during your stream on people buying puts at being at an all-time high. Oh, that's a stupid thing to do. No. Like, still statistically, that is a stupid thing to do. I would still shit on those people. Just because you're right one time doesn't mean you have a profitable system. It means you were right one time. A lot of people in the retail community, they conflate that. They think being right or wrong one time means you have a profitable or a not profitable system. the best systems still lose. The worst systems can still win. So I would still, buying puts at the all-time high on the overall market is a stupid thing. There is a statistical argument for a quick intraday reversal. I've seen some interesting stats about that. But if we hit a new high to swing a put position, that is actually statistically stupid. Like I would always shit on those people. But that's the difference between me and you, Gus, is I know the odds of the market, and you're here just because you got lucky one time thinking that you now know about the market. But in reality, if we were to ask you, what are the odds, man? You're playing a system that I would bet any amount of money you don't know the odds of it. So if you come to a key level, key psychological level, key open interest level, especially an all-time high, is there statistical sentiment to fade that on an intraday basis? Yes, with your risk being just above it. So if you're wrong, like, you're not losing much. Should you swing that bearish position? Absolutely not. The odds just don't suggest it. That's like, go talk to ChatGPT, go talk to Claude, go talk to Julius, load in some data, ask him if that's a smart play. It is just simply statistically not the right play. So I suppose, speaking to an audience here, it kind of depends what time frame you like to trade in. Obviously, that would matter for this particular discussion, but no, it pays to be a bull. It very much pays to be a bull. But coming back to this, like, this is just commonly the issue that you see with retail trading, is whether you're right or wrong once, that is then generically applied to it being profitable or not profitable. All the people who are bearish in here, there's still a very real chance by the end of the day we push new intraday highs. That could happen. Of course it could happen. Of course, we could also sell off. It just depends on the market's reaction to the NASDAQ being at yesterday's high, and it depends on the market's reaction to the set buy being at the closing value. If there's enough demand coming in, if people are stoked for whatever, GDP tomorrow, inflation report on Friday, yeah, we could see new highs. On the other side, if the market in a general sense feels as if we've gone enough and people want to start profit taking, or more so than they already have, of course you could sell off. My point is that either option is theoretically possible. And it's all dependent on people, especially with they're currently carrying large positions. So unless you know what those people are going to do, you can't really approach this game with absurd confidence. You have to have that humble pie and be like, yeah, dude, there are unknown factors here that you just have to admit you do not know. What you do know is your own risk and your own reward. So it's on that note that you could be critical of my trades today. You could be like, well, you didn't stick to your risk. And that's a very, very fair criticism, because that's obviously like where things went awry. So had I stuck to the risk, which whatever, you could like talk to a psychiatrist about like, why do you have a trading plan and then not follow your trading plan? That's obviously a completely different story. But what you know is where your risk is going to be. What you know is where your reward is going to be, or at least your reward, like, style, like, is it trend following, blah 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 blah, like that type of a thing. That's what's known, that's what's in control. You can't control the uncontrollables. But I see people, and like Gus is the real-time example of like this whole like it's called resulting in poker, of based on how it plays out being like, oh, I told you so. That, like, that's the definition of resulting. And what's funny is people who chirp like that, I would bet literally my entire net worth that they are not net profitable traders over their career. They would point to like, oh, I've had success on and off, but yeah, the market's normally distributed. Half the time you should be making money, and half the time you're probably not going to be making money. Of course, you could deviate that a little bit, but you get my point. It's always interesting on this side of social media with such an exposure to retail trading that, like, I just see this time and time again. Do not use singular data points to back up or justify or as a counterexample. Single data points don't really tell you anything. The more data, the better, and you want to do a proper analysis of that data. But like, I even see it on Twitter all the time, like one person making a good call, one person making a bad call, and then just forever, that one's like, oh, nope, that person's right. Oh, nope, that person's wrong. It's just not how this game goes. Remember, this is like my favorite statistic of all time. And if you've heard the show for any amount of time, you've heard me say this a million times, but just to reiterate it to potentially anyone who is new, the best trader of all times, Jim Simons, running Renaissance Technologies, and I'm specifically talking about the Medallion Fund, one individual fund, 60% annual return, has made over $100 billion in net profit. They were only right 50.75% of the time. They weren't even right 51% of the time. Those are the best traders. That is the best organization that has ever engaged in the market, ever. And they were right just over 50% of the time. So this idea of like trying to predict them, like always being right or always being wrong, or ha ha ha, I'm right, or ha ha ha, I'm wrong. That's not the game. That's not how you make money trading. And for whatever reason in retail, it's pitched as if there's this holy grail system and you could solve the model. And if you use this indicator and this piece of information, that you're just right and right and right and right and right. That does not exist. The best traders ever, with the best information ever and the best analysis ever. We're talking about the top tier mathematical minds of the modern era, all working together on the same problem. We're right just over 50% of the time. So in here, like people are trying to say like, oh, you have to be bullish. Oh, you have to be bearish. Like you're going to be right half the time. You're going to be wrong half the time. That's not like the point of it. The point is to be a winning trader. Assume you're right or wrong 50% of the time, plus or minus 10%. Let's say you're in that bracket of 60 to 40. What matters is really the management of the trades. Far more than the entry is actually the management, the exits, and really with the giant emphasis on risk tolerance. That's like inevitably the key thing that people need to like. That's the focus. This idea of like, do you think it's going to go up? Do you think it's going to go down? Dude, folks, it's 50-50. It's just, can you find an edge, and are you disciplined enough to stick to the edge? That's like what the world of profitable trading is, if that makes sense. Apex trader or take profit trader, which one should I trade? Right now, take profit trader is cheaper, but they're pretty similar. Are you planning on holding the long until your counts blow up, or do you have a stop somewhere? I'll hold it until it blows up at this point, because I'm so far outside of like my strategy and I'm being stupid and undisciplined that at this point I'm just like going for the Hail Mary miracle play effectively. Just going with yeah, there's not that much drawdown left. Actually, some of them were already lost, but what it is it's not even back to the drawing board of like, oh, like the system. It's literally just like, I even have the system coded up at this point. It's literally just stop manually trading and trying to like just do extra dumb shit and literally just let the system ride. That would make life way, way, way easier and way more profitable. But hey, that's a completely different battle. All right. Do you think Tesla will fully rebound this week? Dude, did you just not hear that? Like literally after this entire monologue of not predicting, like, and there's no model predict, do you think it'll fully rebound this week? How the fuck would I know? That's my point, is like retail is caught in this purgatory of always asking the wrong question. That's 100% the wrong question. Why does it matter if I think it's going to rebound or not? Like, my opinion on it doesn't matter. Your opinion on it doesn't matter. What matters is, can you get in with a low risk, high reward opportunity, playing with what you perceive to be the trend for whatever time frame you care about. This idea of like Jesus fucking Christ, dude. Like, this is why retail always fails. 95% of retail traders end up worse off than when they started. And this is exactly it. It's because people are not asking the right question. They're asking questions about prediction. No question about prediction in the short term ever matters. Like, Jesus fucking Christ. Like, Jesus Christ. Like, it's a flip a fucking coin. That's the answer right there. Your answer is the coin. What matters? The question is, at any point, it's not, do you think it's going to go up or do you think it's going to go down? It's, maybe you have some sort of feeling of directional bias. Maybe you do have a bias, and then great. If you have a bias, you have a bias. Congrats. Can you take advantage of said bias with low risk and high reward? That's how you do it. Like, it's always the question of, can you get in with a good risk reward setup? Can you get in with something that you expect to be positive expected value? And can you get in with enough size, as in minimal size, where you're not over betting on that particular play? Like, that's how you do it. This idea of like predicting up or down, it's just such a stupid fucking game, and everyone tries to do it, and then yet everyone tries to do the same thing, but yet no one stops to think 95% of retail traders lose. Why is that? And yet you just keep doing it time and time again. The right question is, where can I get a straight card? That's the funny thing about the tarot card is like, it's going to be as accurate as any retail trader. It's probably going to be better. And like, that's literally just the pure luck of pulling a tarot card or the Wheel of Destiny. It's going to always be better because like it effectively has perfect discipline. And as long as it can guess more than 50%, it's going to be right. But time and time again, people, this is a good comment. They're not thinking in bets. They're not approaching the game properly. It's this prediction, and fairly enough, I predicted that this was the low and we would keep going, and I refused to believe that, nope, okay, it doesn't necessarily have to. So like in real time, that is what happens when you're attempting to predict and be like, no, this is the high, this is the low. Maybe you're right, maybe you're wrong. I hope you're lucky, and I hope your prediction comes right, but that's not how you make money in this game. You make money in this game by having an edge, sticking to your risk, and never letting your risk balloon, whether in the sizing or the actual anchoring point of where you admit you're wrong, and then you just try to ride the trend as long as the trend is there. That's how you do it. This idea of like just trying to predict, it's so stupid. It's absolutely sided. He doubled down on an ego play. No, the issue was not sticking to the risk of like when the issue very much was not getting out when I knew I should have gotten out. But this idea of like this bullish or bearish prediction, a lot of people as of now, well, you're still technically wrong. This bearish prediction is still wrong. The SPY is green, granted break even. The Qs are green. So I was going to say like you were right on the day, but technically not, because we're still having a green day. The SPY is green. The Qs are green. The Qs hit a new all-time high. This idea of trying to predict to be bearish, it's actually fucking retarded. And if your point is that it's not retarded because you're currently up money from open till now, that actually makes you more retarded because you don't know what this market's about. You're pointing to a singular example of it working for you, and you think that then somehow makes you a net profitable trader. It's just actually fucking idiotic, like truly idiotic. And I don't know, you might argue with that, you might not, but then when you open up your brokerage account, are you net profitable or not? Like that's one of the beauties of trading, is the truth is in your net P&L. Like literally just go look at your P&L, and whether you want to agree with me or not, you know the thoughts and the framework that you are holding for the market are wrong if you are not a net profitable trader. If you're a net profitable trader, well, then maybe the thoughts and the framework you hold for the market are correct. Your own trading performance kind of proves to you if you're right or wrong. But once again, if we're talking about your net trading performance, not your like individual trade. Too many people put an emphasis on a small amount of data, and there's so much variance in this game that you have to overlook that. You basically have to collect more data. But anyway, as you can see on the screen, the SPY still trending down, but we are at the closing value, and the Q still trending down, but it is the speed, the velocity at which it's selling off is slowing down ever since 11:30 when we hit the high value. NVIDIA is catching a bit of a bid. Tesla's going sideways. There's a mixed situation over here with Tesla being the worst sell-off and NVIDIA being the best gain. So we almost hit a new all-time high on NVIDIA, and we were off by what, like 15 cents, something like that. So will be interesting to track and see how this day concludes. But as of now, no surprise here. It is, yeah, we're literally right in the middle of lunch hour. So fucking literally nothing is going on. So highly recommend not doing anything in this choppy sideways period, and maybe you could catch something exciting either in power hour or like past 2 p.m., something like that. Don't do what I did. Don't oversize. But more importantly than, well, no, I don't know which one's more important. Oversizing or sticking to your risk. They go together, because if you oversize, that means you're increasing your risk. So it's one and the same thing, but that's always the key. If you can keep your risk in check, you will survive this game. That's the end all be all rule of trading, is never let your risk balloon out of control. That's it. That's the end all be all. So best of luck. I'll catch you guys in a little bit. Have a good one. Don't be silly. And best of luck. Hope you make a shitload of money. Peace.